It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
We can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Conversation about fairness and equity in our system, and I think that this conversation is particularly relevant as we debate both a budget and budget and reconciliation bill, where we're talking about providing working families with childcare, healthcare, meeting the climate crisis at the scale that it deserves.
Congresswoman Ocasio-Cortez of New York yesterday at the Met Gala, of all places. Tom Keene, do you want to comment on this one? The scene, the irony of it all? I believe Mayor Bill de Blasio was there too.
The mayor was there as well, and Carolyn Maloney was there. You know, she wore a fire department coat a few years ago, came out last night with a real statement on ERA. It's a celebration, and John, to me, it was a really important celebration given the pandemic. It was sort of a trying to get out, trying to get back to normal again. I drove by the tents coming down this morning. You could hear it. Afterthought wanted to go down. You know, I ran into Ben Platt, actually. Ben Pratt over at Duane Reade on Madison Avenue, which was
in all
great.
denim.
Yeah, he's all in vintage light blue, and
nice.
You know, we had some magic going.
You've been very diplomatic this morning, Tom.
Yeah, well,
let's have a little conversation about this word fairness.
There's Ben.
There we go. Beautiful.
Yeah, you know,
There's some value
I said I love your shoes. They're like what Farrell wears.
Can we talk about the word fairness? The word fairness is a powerful word, Tom, and I think everybody agrees we want to make it fair. So let's talk about what's fair. We need to talk about the numbers properly. And I know it's politically incorrect to even have a conversation about this right now, but we mentioned the statistic at the top of the program. The top 1% in America pay 40% of the federal income taxes. The American tax system is one of the most progressive tax systems on the planet, Tom. On the planet. In the Western world, way more progressive than what you see from elsewhere. And I think if you asked a lot of people in America right now, particularly people who would vote for Democrats, what the bottom 50% pay in federal income taxes, I don't think many would turn around and say the low single digits, TK. Yeah, that's the data there, the numbers.
I think where we are right now, and I thought Zero Hedge had a headline out on this yesterday of 61.2% on New York City marginal, Los Angeles some taxes would be below that. But John, it's the summation of taxes and the summation of the proposed taxes that will affect a broad swath of Republicans and Democrats together.
Tom, we need to have a bigger, much broader, more nuanced conversation that we're just not having in this country.
Yeah.
I'm not going to deny there's a wealth inequality problem. Of course there is in the United States of America. You can see that. We have really concentrated pools of wealth. But this is about assets, TK.
Right.
This is about assets. And we know that if you have assets, you've done really well over the last 12 months. And if you don't, you really haven't. What can we do about that? Senator Warren is having that conversation. I don't think Congresswoman Ocasio-Cortez saying tax the rich. I know it's a simple slogan that needs to fit on the back of a dress. And I know politics, that's all it is sometimes.
Right.
But the real data, the numbers behind that conversation, Tom, it's just become such a lazy narrative in this country, in the media, over the last several years that we need to do much better with.
I'll see Billie Eilish and Oscar de la Renta. We're in Dior last night. Anne-Marie Horton joins us. Too short a visit here this morning from Washington. How does the Met Gala play in Washington? You know, the wonderful Congresswoman from the Upper East Side decked out, AOC decked out. How's it play, Anne-Marie?
There's going to be a lot of conversations regarding the Congresswoman's outfit, given tax the rich was written on the back of her dress. It's a political statement. Many already are drawing to Twitter with criticism by the fact that to attend the Met Gala, which is probably the most glitziest elite event in the world, most elite event in the world, it is $35,000 a minimum for a ticket. Now, to her defense, lawmakers, New York City elected lawmakers, they go every year. They're invited. It's support of the arts in New York. But this is obviously going to get a lot of attention. And then, of course, you mentioned Congresswoman Maloney from the Upper East Side and parts of Astoria, et cetera. She had a different message, and that was for equal rights for women. But they both took this moment to make political statements. But of course, taxing the rich, that is the one that is going to resonate today in Washington as you have the House Ways and Means debating this tax plan.
Let's go there. Let's talk about policy. What are House Democrats proposing?
What they're proposing, I think what the New York Times wrote makes the most sense. They're taxing the merrily rich, not the fabulously rich, meaning it is just higher rates mostly across income. And you look at the example that they give regarding Jeff Bezos. In 2020, his paycheck was some $81,000. That was Jeff Bezos' paycheck. So if you are going to tax his income, that is not going to be a very, very high income rate. The wealth in this country for the top wealthiest people is in what you just said, Jonathan, is in assets. It's in real estate. It's in stocks. It's in bonds, which have done well over the course of the past year, the course of the past decade.
How much focus is there at this point, Anne-Marie, still on implementing the tax rates that currently exist, given the fact that an estimate hundreds of billions of dollars do not get collected because of maneuvers to get around it?
There's gonna be a lot of debate back and forth. I think one benchmark many of the Democrats are going to use is to try to get the system, at the very least, back before the 2017 Trump tax reductions. That is going to be one bar. But the House Democrats are actually less ambitious, as you have some Senate Democrats as well as some in the White House. But there's going to be a lot of back and forth on this before you see any decent legislation being put into the reconciliation package.
So what happens for the rest of the week on this? Does it sit for a couple weeks as everybody comes up with a plan, or is there action here?
No, there's action. Today and tomorrow there will be a debate on it, and it's not set in stone, but all of at least the House legislation in terms of the draft legislation to debate is supposed to be due by September 15th. So today and tomorrow will be a big deal in terms of what goes on in the House Ways and Means Committee. The other thing to note, of course, is that what is absent from this draft legislation is SALT tax relief, and this is very important to individuals where you're sitting in New York State. And you see that from Congressman Tom Suozzi, who says no SALT, no deal. That has yet to be implemented in this plan proposal from the committee.
Looking forward to see how this inflation print plays out down in Washington a little bit later as well. Anne-Marie, thank you. It's good to catch up as always. And good to have you back, Anne-Marie. Thank you. A welcome back. Did we welcome her back, Tom?
No.
It's a welcome her back. Anne-Marie, welcome back.
You know,
Anne-Marie Horton down in Washington, D.C. Did she make it to the Met Gala, did you ask? I missed that.
Dior on,
she was in Dior?
Yeah, they're in the new store over by the Apple store.
Thank you, TK. CPI, 2 hours away in the United States of America. Lisa, what are you looking for this morning? Is it the data, how the market responds to the data, the policy conversation? What is it?
Well, right now, you mean you're wondering what I'm so deep in thought on? I'm just listening to the conversation on taxation, and I think that it's a complicated one. And part of the problem is that politics doesn't do nuance too well. So a slogan reads really well on a Met Gala, and yet the details are what matter. I mean, Barry Eichengreen yesterday, when he was talking about how sovereign debt can be actually very helpful if it is spent correctly. And I think there is not sufficient appetite for the boredom of going through the details. And frankly, The corporate tax rate being as low as it is for the likes of Apple, the corporate tax rate not really playing up to where it used to be, a number of other aspects that really raises a question, and that really The Economist was laying out about the monopolistic character of certain companies in the United States. I'm just looking at all of those dynamics. Is there really a sea change, or are we in the same new normal that's leading to bond yields where they are in the same growth trajectory, which is going down? That's what I'm thinking about.
Several points that we're all making this morning. And I think we're having a conversation about income taxes, corporate taxes. Lisa, I'm with you. That's a very separate conversation, though, and it's just not the divisive conversation about someone's taking something from you and something you don't have. And I just don't think that's very helpful, that's all. Futures this morning up 5 on the S&P, advancing 1/10%. Yields up a basis point, 133.94 on 10s. From New York, it's CPI morning in America. Good morning. This is Bloomberg.
Ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
From New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
CPI day in America from New York City this morning. Good morning. Heard on radio, seen on TV. This is Bloomberg Surveillance. And here's the Tuesday morning price action. Equity futures positive 6 points, up a little more than 1/10% after yesterday's bounce back from 5 days of losses on the S&P. Some muted gains again this morning. The small caps up 0.2%. Marko Kolanovic, Tom, out over at JP Morgan, talking about buying into the cyclicals again. The rotation is coming back, reinforcing his view that he thinks yields bottomed last month. Remember, 112.58, the lows intraday of last month in August, early August. Switch up the board and get to the bond market right now. 2s, 10s, and 30s going into CPI. We look like this. 10s right now, 133.60. Yields up about a basis point going into this on 30s. Up another basis point, 191.46 on 30s. What happens when the Fed pulls back? Take a look at what's happening in Europe right now. The spread between Germany and Italy, just a break below 100 basis points, Tom. For the first time, I think, since
What's
spring.
that signal?
The signals that we're doing okay, even though the ECB has talked about reducing bond buying, that the spread between Germany and Italy, driven today by German yields having a little bit of a lift, is still pretty narrow. Coming in, just a break of 100 basis points, something to think about. Here's another thing to think about. Let's finish on this, Tom. The commodity market. Switch on the board and get to WTI. Triple-digit crude. I don't want to let this one rest. We had Francisco Blanch of Bank of America on this program pretty much this time yesterday, talking up triple-digit crude on WTI. TK right now, $70.98. His base case, I believe, is something near triple-digit crude going out to the middle of next year, summertime. He's basically saying if we have a cold snap, a cold winter, we could get there sooner, 6 months sooner. Tom, can you imagine if we have triple-digit crude amidst a conversation about higher inflation in America? Now, the Fed can strip out whatever they want. You're going to feel that.
You sound like on the edge of Lisa.
Is going to feel that. But it's true.
You sound like the edge of Lisa.
Lisa speaks the truth sometimes, and Tom, when someone speaks the truth, you just have to agree with them.
Sometimes.
Well, sometimes it's a rant. And then Ramos Bears come after you on Twitter. Have you noticed that, Tom?
The two of you together on TV for radio, it's like a gloom shot. Lisa and John together on TV, it's all gloom. Let's get away from the gloom and say you got to be invested. You can't be all in cash like I am. Tony Roth, Wilmington Trust, joins us now. Their Chief Investment Officer. Tony, I got like 8 ways to go here, but let me pick up on what John said. You have an international cast, and if we get a commodity rally that continues in some way, what does that mean for Asia and Pacific Rim?
Well, it's good for Asia and Pacific Rim, right? They are essentially providers of commodities, and that provides sources of revenue and profit for them. So I think that's good for Asia and Pacific Rim overall. Of course, you've got a very weird situation going on in China, which is 50 to 60% of the market cap of that part of the world. And they're essentially marching to the beat of their own drummer right now. And so whatever happens in China is going to be, an exception to the overall scenario from a commodity standpoint. But certainly higher commodity prices are going to benefit the emerging area of the world, ex-China.
You are acclaimed for the management of quiet money. You are speaking loudly about own the financials. Great. I want to buy the banks. But which banks do I want to buy, Mr. Roth?
Probably the large money center banks right now. We are expecting to see higher inflation. So, for example, we have the CPI report coming out today, and we want to be able to see, we had a big number last week on PPI. We want to see our companies able to pass on those costs to consumers. And if they are able to do that, and we continue to see inflation expectations creeping up, we're going to see higher rates. We look at the overall inflation situation, and we see higher inflation throughout the economy. There's a lot of focus on the transitory nature of some of the key drivers of inflation over the last 6 months, which have been services and used cars, and they may be abating, but they're being replaced with other more structural forces of inflation, supply chain, and wages.
So, Tony,
and so when you consider that, and you consider where interest rates are going, they're going higher. And in that environment, large money center banks and even regional banks, such as the bank that we're owned by, M&T Bank, should do very well in that environment.
So what about the tech sector? Does that mean it falls out of bed because rates are higher?
Well, it means that on a relative basis, it underperforms. So as long-term investors, we're not going to structurally underweight the tech sector right now, because that's where all the innovation occurs, and that's the rails upon which the economy is running right now. So we have a market weight on the tech sector, but we're overweight financials, industrials, materials right now. because those are the cyclically sensitive areas of the market that are going to perform as we move to a higher rate environment, which we think is coming very clearly.
This relative value argument I'm struggling with because all of it is predicated on the idea that rates are very low. People are saying on a relative basis, earnings yield looks phenomenal, stocks look cheap. At what point when yields rise, does that relative value basis no longer work? And frankly, all stocks lose some luster just based on the relative valuation that so many have been used to justify the purchases.
Yeah, I think there's a lot to that, but Lisa, but at the same time, you have to remember that real rates are still quite negative right now. So until we get into an environment where real rates start to get close to break even and maybe can nudge into a positive territory, when we have GDP expectations of 5.5% for this year, even if we don't get the 3.5 trillion, let's say we get 3 trillion or 2.8 trillion, we're going to have GDP next year, Lisa, of 4 to 4.5%. So we have strong growth expectations. We're not near the end of the cycle. And so in that environment, we continue to like equities, even if we see the 10-year rate at 2.25%, where you still have slightly negative real yields.
Which stocks will go down less when we move 150 basis points?
I think that you're going to see the financials outperform the rest of the market, clearly, because they're going to benefit, particularly the regional banks that are more levered to their loan books. You're not seeing a credit cycle. You're not going to see a credit cycle when rates move to that level. The credit cycle is probably still a couple of years down the road. So without seeing that credit cycle occur, you're going to see all those financial companies that have leverage in their operating models. When you have higher rates, they're going to outperform.
Are we going to have fewer banks? I mean, let's go Andrew Jackson here. Are we going to end up with 6 banks?
Well, the Fed is not allowing banks with balance sheets over 250 to consolidate. So I think that you are going to see bank consolidation throughout the country, but you're not going to end up with larger, more monolithic money center banks because they're not being allowed to grow above their current levels. Where you will see consolidation is across the community bank and regional bank complex, where there's still many thousands of banks. And you'll see consolidation for sure, because the smaller players just can't afford to pay for the technology infrastructure that you're seeing is required in order to drive customer satisfaction in today's world.
Tony, where's the safety right now in the market?
Well, I think interestingly, it continues to be in some of the traditional assets that are nice hedges against inflation. And those are the more cyclically sensitive areas of the equity market that I've talked about. Believe it or not, I think that those provide significant safety. I think that an exposure to tail risk hedges like gold. And I think that we are for the first time having a serious conversation around crypto and possibly Bitcoin as an element of our portfolio.
Oh, there we go, Tony.
It would be 1 or 2%, but we've never included that before. And when you consider the ecosystem around Bitcoin and the way that Bitcoin is cannibalizing precious metals as a store of value, it needs to be taken seriously.
You think it's a good store of value then, Tony? What gives you that impression?
Well, you think about what a currency is supposed to do. The blockchain provides a very certain security, and there's a whole new layer above the blockchain called Lightning, which is why they were able to launch Bitcoin, I believe it was in El Salvador, and that provides a medium of exchange. Not every transaction needs to go into the blockchain. And there is such a deep ecosystem now that's been created that it's very difficult for a sovereign state to create a competitive cryptocurrency. And so even though Bitcoin is not perfect by any means, those attributes, the blockchain and the ecosystem that it has with Lightning now sitting on top of it, providing a medium of exchange, is very attractive. And those are some of the reasons that we're considering Bitcoin, although it's expensive right now, and we're not sure it's a good entry point.
Tony, I'll tell you what, come back another time soon and we can have a longer, deeper conversation about this. I think it's important. Tony Roth there, Wilmington Trust Chief Investment Officer. Caught up with Laurie Calvasina about the cyclicals a little bit earlier this week. Yesterday, in fact, Tom. Yesterday morning. This pivot towards the banks. Her forecast as follows: 4,500 on the S&P this year, 4,900 next year, ton of volatility in between. And she really wanted to make the point to ignore the volatility in between and to look out to where this is going. She wants to buy this market. And this was the quote. While we take the reasons for a pullback seriously, we also see economic recession risk as low, reducing the likelihood of a full growth scare, and intend to treat it as a buying opportunity. The words of Lori Calvasina over at RBC.
Well, the second best tweet I've seen today after the Nicki Minaj tweet was, John, your tweet on Bank of America and the abrupt reversal that they see in their survey. I mean, it is seismic, the changes of opinion we're seeing.
Well, let's go through the numbers, Tom. Expectations for global growth slump has dropped to 13%. Lowest since May 20 was 75%. In June 21. So global growth expectations are declining. Rising profit expectations declining too. 12% down from 89% back in March 21. But recession expectations, and let's not conflate the two things, decelerating growth with the potential for a recession. Recession expectations, Tom, just 6% of respondents expect a recession. And that kind of plays into Lori Calvasina's thoughts over at RBC.
Well, it does, but you know, if you take a recession as 2 quarters of negative GDP, just as a general statement, and there's some employment dynamics there is well, the way you get out 3 years or 4 years to say we're going to avoid that, and we're just at some point going to come out of this pandemic. That's the bet of the bulls.
It's the Tony Dwyer cheat guide, Lisa.
Exactly.
That if we're not going to get a recession, keep buying the equity market.
What's a recession if the Fed's going to keep using its balance sheet and doesn't get off zero? I mean, honestly, I think that a lot of people are looking at that for a credit cycle barometer.
Yeah, I'm with you. You could get the econ call right then past year, and you can get the market call very wrong. Equity futures up 6 on the S&P, advancing a little more than 0.1%. Yields up a basis point on 10s. What are you singing? 133.77.
Ben was singing.
Nice.
I saw him in the Dwayne Reed, and Ben was singing it.
He was at Dwayne Reed. What was he buying?
He was buying breath mints. I was buying a 6-pack of Jenny Cream.
That's what I was going to ask. What were you buying?
I don't believe the former. I believe the latter, though. This is Bloomberg.
With the First Word News, I'm Leanne Gerrans. President Biden is urging California to send a message to the nation by keeping Gavin Newsom as its governor. Newsom faces a recall election today. Polls show he should survive the vote. The president appeared with Newsom and repeatedly linked the leading Republican candidate in the recall, Larry Elder, to former President Donald Trump. Now, Justice Stephen Breyer is skeptical about Democratic calls to expand the size of the Supreme Court. He said that adding seats would invite retaliation by Republicans and could eventually weaken public confidence in the judiciary. Breyer was invited for the Bloomberg Rubenstein Show peer-to-peer conversations. Russian President Vladimir Putin has gone into self-isolation. He was exposed to several people in his entourage infected with the coronavirus. A spokesman says Putin is healthy and tested negative for the virus. Amazon is going on a hiring spree. It will hire 125,000 workers for transportation and warehouse jobs in the U.S. Amazon will offer average starting pay of more than $18 an hour. The company also will offer sign-on bonuses of up to $3,000 in some locations. And the maker of TurboTax and QuickBooks software, Intuit, has agreed to buy email marketing firm MailChimp. The price of $12 billion in cash and stock. The deal will let Intuit increase the services. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Last night we were at a dinner at a restaurant, and as we were walking out, a man walked over to me and said, "Thank you very much, you paid for my daughter to go to college." And basically I get that all the time. It's the most unbelievable thing. That's my job.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or...
Traders, I'm going to place an order to sell short British pound. Another order. Another, as you can see, we hold several positions on British pound. Right now, the order placed at 138.693. Okay, if you're looking to trade British pound, 138.693. This is where we're going to place this order to sell short. Okay, so copy your trade and follow me, stay with me, and we will close this trade in profit. Okay, guys, I'll speak to you later.
Spend competition, but so far the cannabis sector seems to be holding up very strong.
One of the ways we can protect kids is to have adults generally vaccinated. A second way is to have adults in schools vaccinated. And so I'm very supportive of policies that require adults in schools to be vaccinated. It's absolutely for the safety of the kids.
Joshua Sharfstein there, the Johns Hopkins Bloomberg School of Public Health Vice Dean. From New York City this morning, good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Here's the price action in the equity market on the S&P after yesterday's mild bounce on the S&P 500 from 5 days of losses. Up 0.1% on futures. TK yields higher by a basis point at 133.77. Bit of a snooze elsewhere going into inflation data, which is due in 1 hour and about 42 minutes' time.
I'll be honest, John, my radar's up here. Within the snooze fest of the last number of weeks, you wonder if this CPI report that we'll see here at 8:30 gets it done. This is a really, really important conversation. As my head, your head, everybody else's head swirls on the pandemic. Amish Adalja has been extremely competent in engaging the debate worldwide over a perfect solution to pandemic, to virology. He is with Johns Hopkins Center for Health Security and joins us right now. Dr. Adalja, I was thunderstruck that Auckland looks for perfection. They have 33 new cases, 1.7 million people, and I'm going to dazzle you now, Amish. 2 times 10 to the minus 6%. Scientific notation we got to go to, folks. It's a teensy-weensy amount that's ill. How do you respond to their attempt to be perfect?
I don't think it's the right approach. I think that this is something that's popular in New Zealand, but it doesn't really justify what they do. Their level 3 and level 4 lockdowns are really borrowing from the Chinese playbook. And I don't think that the way that they're so blanket, they pick up so many activities that aren't leading to spread, that don't allow people to do things in a safer manner. For example, go outside or not have to wear a mask when they're outside, or even be able to get takeout dining when they're under level 4 lockdown. So I don't necessarily think what they've done is correct, but they are vociferous defenders of it, as I found out when you criticize them. But it is something that I think really needs to be examined, because it's not sustainable, and they have about 30% of their population fully vaccinated. That's not a lot, and their rates are going up. But I don't think we need to do this in the post-vaccine era. And also, we've got rapid tests. We've got so much technology to allow people to do things safely, that this abstinence-only approach, even if it's popular, shouldn't be what's done, and definitely shouldn't be enforced with police the way they do in New Zealand.
I don't sense it in America, but maybe I'm uninformed. Do we have elements of New Zealand from sea to shining sea?
We don't. We've had some aspects of it. For example, when you look at California, which had a very strict restriction on indoor dining or in outdoor dining as well, and you still saw cases really going up in California, because what that was doing, that abstinence-only approach in California, was driving behavior underground where it was more risky. And I think the lesson from this pandemic is that harm reduction, something that we do with HIV, with sexually transmitted infections, that's the way we want to approach public health, with voluntary means, trying to give people tools to make better risk calculations, knowing we're never going to get cases to zero, that there's going to be a baseline number of cases, hospitalizations, and deaths, but just trying to keep our hospitals from going into crisis. And I think we should have been doing that back from January of 2020. And I don't think that the U.S. is the good example here. I think they're both false alternatives, New Zealand and the United States, and there is a better way, a way like countries like Taiwan follow.
Dr. Adalja, in the meantime, the debate over booster shots continues to heat up, and just on a rival network, Dr. Fauci has been speaking, and he's saying that he does expect the FDA to decide to give boosters. Meanwhile, several FDA members have resigned, saying that it's unnecessary or perhaps scientifically unbacked. Where do you fit into this in terms of the need or lack thereof of boosters?
To me, the threshold for needing a booster would be someone that's fully vaccinated, getting a breakthrough infection that lands them in the hospital. That's just not happening. There's definitely probably going to be some need for boosters down the road, but I don't think it's going to be on September 20th or 6 months or 8 months post your second dose. It's something we need to be proactive about, but I don't think we're ready to pull the trigger for healthy people. There may be an argument to be made for the elderly, people in nursing homes, but that also needs to be driven by clinical data, not just looking at antibody levels coming down, but actually seeing, do people get severe infections this many months out from their vaccination? And does a third dose not only boost their antibodies, but does it actually protect them against that? So we want clinical data. We want this to be driven by the usual process of the CDC, the FDA, and all of that data being published so that people can actually look through it and sift through it, not something that's primarily being announced by the White House that's triggering people at the FDA to announce their retirement and to write in medical journals opposing it.
Dr. Adalja, what's the potential concern here about giving boosters? Is there any scientific evidence of harm, or that it doesn't really affect things at all? Or is it simply a matter of distribution of vaccine and trying to get unvaccinated vaccinated throughout the world as quickly as possible?
There's probably not a major harm signal, but again, if you read what the FDA, the departing FDA members wrote, they're worried about side effects that might occur if that third dose is too close to the second dose, or what that might do to the reactogenicity of the vaccine. But again, this is something that can be solved and answered with clinical data, just to look and see what happens to people who get a third dose. And that's what's really missing, or at least hasn't been presented publicly yet. And that's why I think that you've seen such a backlash against this plan from the infectious disease community, with a few notable exceptions. But in general, most of us don't think for healthy people that we're ready to recommend boosters in the absence of data. And it's important to remember what's happening in the United States with the number of hospitalizations and worries about crisis in places like Idaho and Kentucky. That's not going to be solved by third doses. It's first and second doses that solve that. And I think that's where the focus needs to be. And I think that we can prepare for boosters, get ready, but make sure that we do this right so that people have confidence that the process actually was scientifically driven and not driven by any other considerations.
Doctor, thank you for your time this morning. As always, Dr. Amish Adalja there of Johns Hopkins Center for Health Security, the senior scholar. Here's another headline from Dr. Fauci speaking on the American broadcaster MSNBC. Vaccine and test rules for domestic travel being considered. Boosting fine for breaking travel test rules is on the table. Tom, there's a headline for you. Vaccine test rules for domestic travel being considered, something that Dr. Fauci has suggested more recently as well in the last week.
You look at the vector of deaths. We haven't said enough about it. Bloomberg had a good chart on this the other day, but the deaths coming up here and the hospitalization issue, John, you know, I've been guilty of this as well. It's like, well, we're sort of over this and we're vaccinated. Things are fine. Guess what? They're not. And these experts are dealing with it.
How do you think the country would respond to vaccination requirements for domestic travel, Tom?
Well, I don't mind vaccination requirements. That, you know where I sit on this, John. But I just think it's, it's very fluid right now. I mean, I'm scheduling a trip to Toledo here end of the year, and you wonder how you're going to get there.
I don't believe you, but yeah, Lisa, a comment on that headline, an important headline for the airlines and for the travel industry in this country, suggesting that that's being considered currently.
Well, currently the vaccine and test rules, I wonder if this just goes back to this idea of either you have to be vaccinated or you have to have stricter testing protocol before you go anywhere. And my question is enforcement. Also, we got to get testing back up to a certain speed. I mean, there was a time where I couldn't get a rapid test in New York State anywhere at any, sort of city MD, like any kind of a rapid urgent care type center. How are they going to implement this?
That was to go to the Adirondacks and go canoeing? Is that what the rapid test was for?
It's various, to go to the store.
Up at Tupper Lake.
What's the record for being serious on this program?
No.
2.5 minutes?
Why wasn't Dr. Fauci at the Met Gala? I mean, that's,
I don't know, Tom.
That's the question.
What would his message have been?
It was get vaccinated.
On the back of his jacket. Tom Keene, Lisa Bravis, Jonathan Ferro. It is CPI Day in America from New York.
It is.
This is Bloomberg.
Electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose for this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
Here's the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
As we kind of started the reopen earlier this year, the bar for the data was high. And I think it was very difficult for the data to live up to that bar.
The problem with this recession is that most of our policy tools are already exhausted.
The market is not ready for the market going up. We've had massive amount of inflation in this era of easy monetary policy and zero interest rates.
The messaging of what they see going forward and what tapering means will be very, very important. Right now, the market doesn't care.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Inflation in America 90 minutes away from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market up 4 on the S&P, advancing 0.1%. The data TK 90 minutes away.
Dana, 90 minutes away. We're going to talk gold in this first block of the show. Please stay with us on radio and TV on gold, gold, gold. But John, I got to admit, this inflation, it's a different look on the ECO screen.
Okay, guys, as you can see, I need to cancel order to sell short because it moved straight away down. Let's wait what's going to happen with following this movement. So let's see where it would lead us. Okay, please cancel your order to sell short British pound, and I'll let you know what's going to happen next with this pair. Okay, stay safe.
Everybody's got an opinion on this. John, you know where I am. I'm technology to the rescue. We need to buy a new iPhone.
Or maybe 2, Tom. Or maybe 3. Or maybe 4. Or maybe 5 at Christmas, TK.
Too, yeah.
I'm looking forward to how much you've got to spend a little bit later this year. Lisa, for this Federal Reserve on the policy front, we have to ask a simple question. How much more of this can they tolerate before they have to turn around and say the message needs to change?
Well, and also, what can they do in terms of tightening policy that could actually affect why prices are going up so quickly? And I'm talking consumer prices when it is driven by supply chain. And frankly, it goes to what Jens Nordvig was saying. They are looking at, a lot of analysts are looking at the broadening out of where the inflation is coming from. Is it just from supply chain disruptions, or is this a broader demand issue that continues to persist?
Let's set the stage for you this morning, this Tuesday morning. Good morning. Equity futures on the S&P 500 doing absolutely nothing. Up 4 on the S&P. We advanced by almost 0.1%. Muted price action in the FX market. Euro dollar in almost 0.1% to 118.02. And yields higher, Lisa, by a basis point. Going into that inflation data, 133.77 on 10s.
I do wonder what the bond response will be if there is an upside surprise to the CPI data. That has been very hard to predict. And frankly, increasingly, it means lower long-term yields for a number of reasons. We get that CPI print in about 90 minutes' time. The expectation is for an increase month over month of about 0.4%, slightly lower than last month's increase. Nonetheless, definitely the upward trajectory and the highest CPI that we have seen in years. I am watching this versus wage increases. This is potentially disinflationary if wages don't keep pace, and we have seen wages go up, but not enough to overcompensate for some of those higher prices for the consumer items, such as anything you buy in the grocery store and, of course, rent. 1 p.m., Apple is unveiling the iPhone 13 just for Tom Keene and the Apple Watch Series 7. I imagine a lot of people will be watching this, but there will also be a lot of chatter about the Epic ruling and how much Apple has to pay with respect or give up in terms of revenues as a result of some of the apps that they have in their store. And then later tonight, we get Chinese August retail sales, industrial production, property, and employment data. How much is the Chinese economy slowing? This is really a big question mark. People expecting this to come in weaker. How much does this test Xi Jinping's resolve to try to strip out some of the leverage and perhaps allow growth to slow versus coming back in with more credit easing?
I'm with you, Lisa. As always, looking forward to that data coming out overnight to get a read on the Chinese economy. On this inflation day in America, we consider gold. Matt McLennan joins us now, First Eagle Investment Management Global Value Co-Head. Matt, let's go there. Why we should consider gold in the environment we're in right now.
Well, I think you should look at gold as a potential hedge. Gold has typically done well when real interest rates have gone down, and when inflation gets up ahead of steam, sometimes interest rates rise with a lag to inflation. Secondly, if you have inflation that's located in one currency in particular, currencies tend to go down, and gold is a good potential hedge against that. The other thing I'd say is if you look at what happened in the 1970s, when inflation took off, risk assets were hurt pretty badly and long-duration bonds were hurt pretty badly, but you can't print gold. And so gold preserved its value in real terms. In fact, it went up in real terms during that period.
Matt, you are the legacy of Jean-Marie Eviard and all of SocGen's effort in commodities. I look at your fund, and the fund the last 10 years has been flat, maybe negative 2% per year. You buy gold to own gold, I get that. Over 20 years, you've got a much better 9% return as well. Now you've got Bitcoin, where you've got Bitcoiners saying Bitcoin is an Eviard alternative. What do you say?
Well, I do think Bitcoin exists, right? I mean, it's the largest server network in the world, and it's probably best seen as being a call option on being digital gold. It certainly hasn't been around long enough to be called digital gold. It's not even a teenager yet. But I would say that Bitcoin is being valued fairly richly as an option on being digital gold. It has a market cap of nearly $1 trillion. And so we see it out there existing, but gold has coexisted with treasuries. It can coexist with Bitcoin. Ovens and microwaves exist together.
Okay, so basically it sounds like you're not going in Bitcoin. Is that the correct takeaway here?
Well, you know, we have a 40 Act fund. It's very difficult to invest in something like Bitcoin in a 40 Act fund, given the volatility character. But I think that if you look at gold, it has a lower risk character. It's maintained a negative correlation with real interest rates in the currency, and it's traded in inverse cycle time with risk sentiment. Bitcoin today, because it's still in the early phases of adoption potentially, trades a little bit more like a growth equity. It has much more volatility. It has less defined negative correlation with real interest rates and risk assets. And so it doesn't yet trade as a hedge asset the way you see gold trade. And so I'd say it's too early to say whether Bitcoin has achieved that digital gold status.
Matt, why are we talking about gold? Why are we talking about Bitcoin? Right now, are you looking more for a way to hedge or more for a way to ride the rally that a lot of people see continuing for a long time?
So if you look at our broader diversified portfolios, we are primarily invested in businesses, cash flow generative businesses, either that own scarce assets or that have entrenched oligopolistic market position. But because we're an owner primarily of business, we do want a potential hedge in our portfolios. We recognize, whether it's due to inflation, geopolitical risks, leverage in the system, that if you're an owner of business, it helps to have a potential hedge in the portfolio. And we've seen gold as the least worst choice in that regard because of its superior real returns over the long term relative to treasuries and because it's lower cost relative to hedging via options.
The Kidston Gold Mine is in Queensland, Australia, back to 1907. There is a romance of Broken Hill property and the ownership of Newmont and all the others that you own as well. How is gold mining doing right now from Queensland around the world?
You know, we've seen a big transformation in the gold mining business. What's happened over the last 20 years is we've seen the emergence of professional, disciplined management teams. And so we've seen the big gold mining majors, whether it's the Newmonts or the Barricks of the world, focus on their tier one assets that have scale production and good positioning on the cost curve. They're also starting to distribute the cash flow to shareholders. And in this environment...
How odd.
Yes.
John, that's just so quaint.
Some capital returns, Matt.
It's a good thing.
We all agree. Matt McLennan, thank you. First Eagle Investment Management Global Value Co-Head. An important conversation, Tom, on inflation protection, perhaps, going into CPI a little bit later this morning.
Well, it is. And I mean, they're linked to CPI. And, you know, we heard earlier from the Bitcoin angle from Tony Roth at Wilmington, you know, they're starting to look at Bitcoin as a gold alternative. Do you buy it, John?
No idea, TK. You know what happens when you weigh in on Bitcoin? Bramo's Bears come after you on Twitter.
Bramo Bear.
Bramo's Bears. That's what I'm calling
What
that
are you going to do?
group.
Are you going to put Krugerrands in your dresser drawer in your bedroom, or are you going to put Bitcoin in there?
My granddad used to have them a long time ago, Tom. I wish he'd kept hold of them too. Yields higher this morning by a basis point on 10s to 133.77. Equity futures, just to set the stage going into this inflation print, look like this, up 3 points on the S&P 500.
Have we moved like in the last
advancing
month?
0.06%. We've not done much, Tom. We've not done much. We need to settle some massive debates, though. Huge debates, monster debates. I'll be talking about job openings in America in about 20 minutes. They are sky-high record highs. What will it take to close the gap between demand and supply? And can we close the gap between demand and supply when we have very clear supply constraints right now? Not just in America, but worldwide.
You're very microeconomic this morning, John.
I'm just doing it for you, TK. You know, there's things we have to cover, and that's one of the stories we have to cover.
We're doing ISLM theory in our next hour. Just don't.
You'll have to explain what that is.
Right? You know, I talked to Ben about it at Dwayne Reed last night.
What did he say?
He said, he thinks it's an important idea.
Do we have to do the dress again? Do we have to do the dress again?
We should do the dress again.
Okay, we
just
can do the dress
it for
again.
Matt McClellan.
Not right now. Let's do it later.
Okay, we'll do
Let's
the
do it
dress
later. Chris Crisanti's going to join us on the dress.
Yeah, next year AOC is going to wear a buy gold.
Strategist.
Yeah.
Is that what AOC is going to wear?
Next year,
Congresswoman
buy gold.
Ocasio-Cortez saying buy gold. I don't think so, Tom. Lisa's looking very disappointed with you for not being serious enough about a serious conversation.
You know, it's just, I feel like it's a slogan, and I think that the discussion has to be a lot more nuanced. And I think it's difficult to talk about these discussions. I mean, again, go back to Barry Eichengreen. Spending can be really useful, but it's the details.
Well, nuance doesn't fit on the back of a dress, does it,
Was
Tom?
Kim
That's the problem.
Kardashian nuanced last night? Did you see the black thing she was wearing?
Carry on.
All masked up.
I'm going to have my seltzer.
You think Bramo's bears are bad? You want to go after Kim?
I don't know. I'm not going after Kim. I'm just saying she wasn't nuanced.
Let me just tell you that.
Commodities 70.72
Thank
on
you.
crude at
The
4/10 of what? That's got to be the call. That's got to be the call of the past 24 hours.
Yes.
It
Let's
is.
have a chat about it. If we get triple-digit crude in the world that Bank of America is forecasting here, Tom, what does that mean for the political conversation down in Washington?
John, are we ready for $80 crude?
We're getting closer, aren't we?
Yeah.
What are we, $9 away?
Yeah, I'm looking at Brent, $6 away.
The headlines, you're going to strip that out when you do your nice trim mean stuff, Tom? Cut out inflation?
I don't know.
all the
I think
bad stuff?
80's got somewhat the same wallop, and you're right about 100. That would be a game changer.
Big time. Equities this morning, pretty flat, going into a CPI report coming out in 1 hour and 19 minutes time. You love that. You've been listening to that song all
Ben
morning.
was singing it in Dwayne Reed. What can I say?
Instead of focusing on the show.
That's worrying.
John,
Just
pitch
wandering
perfect.
around
Get
Dwayne
with
Reed
it,
late
John.
at night with a can of beer.
Surprise you?
Yeah, I need to have a chat, okay? I don't want you getting in trouble. You go into those 24-hour places in the middle of the night.
Well, I am.
Looking a bit
I
confused.
needed a six-pack.
From New York, this is Bloomberg.
With the First Word News, I'm Leanne Gerrans. Tropical storm Nicholas came ashore in Texas early today. It is bringing torrential rainfall that is threatening to flood Houston and parts of Louisiana, still recovering from Hurricane Ida 2 weeks ago. Nicholas was downgraded to a tropical storm after briefly being rated a hurricane not long before making landfall. It could jump as much as 18 inches of rain. House Democrats say they will undo the $10,000 cap on the federal deduction for state and local taxes. That's after a House committee didn't address a tax break in a package of proposals. A number of Democrats say they cannot support President Biden's spending bill until the so-called SALT deduction cap is lifted. The cap mostly affects those living in high tax states. Here in the UK, a panel has recommended giving coronavirus booster shots to people 50 and over, along with other vulnerable groups. It urges that the vaccine begins this month. The British government is trying to increase the immunity of its population and prevent a potential surge in cases this winter. China's Evergrande has come up with a dire assessment of its financial health. The struggling property developer says it faces tremendous liquidity strains, and it has hired advisors for what could be one of the country's biggest debt restructurings. Just how much Evergrande's investors will lose depends in part on whether Chinese authorities and state-run banks take steps to limit that fallout. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
但如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港易嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
Inflation. So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The eyes of the nation are on California, because the decision you're about to make isn't going to have a huge impact on California. It's going to reverberate around the nation, and quite frankly, not a joke, around the world.
The President of the United States from New York City this morning. Good morning. Alongside Tom Keene, Lisa Bramwitz, I'm Jonathan Ferro. Your price action 1 hour and 12 minutes away from inflation data in America. There's not much price action out there. The S&P up 2, advancing 0.05%. Yields higher by a basis point to 133.94. The euro, muted price action there as well. Euro dollar 118.07. Totally unchanged. Here's the commentary from Bank of America in their fund manager survey. They call it the bottom line: tanking macro optimism, lower for longer rates, everyone long stocks, short bonds, an inability of fiscal frenzy to sustain the boom means portfolios are flipped, Tom, from long cyclicals to long barbells.
Buying the gloom. Is this where I find an entry point, John, from triple leveraged all cash?
So here's the issue right now. I can line up the strategists, Tom, that are looking for a correction, but a correction you want to buy. And obviously right now we don't have that correction for them to buy. And if enough people share that view, do you ever get that dip?
Yeah,
I mean, I
exactly.
joke, but Tom, that seems to be the mood right now.
Well, we'll see. I think this inflation data could be interesting, to say at the least. Please stay with us on radio and television. Now in Washington, Emily Wilkins joins us with Bloomberg Government. The president was talking there about the reverberations of California and Governor Newsom. Emily, what's the reverberations of in New York City, a 61.2% marginal bracket, in Los Angeles, a just below 60% marginal bracket? How does this reverberate for a guy who wants his party not to be losers in 22 and 24?
Well, right now, if you look at what Democrats are focused on, they are focused on this reconciliation package and getting that done. And if you talk to progressives, they really see this package as how they are going to keep the House in 2022. And remember, Tom, due to historical precedent, as well as due to redistricting and the fact that Republicans have more control over that process that Democrats do, Democrats aren't in a great spot right now for the midterms. And they see passing this bill, going back to their constituents, being able to point and say, look at what we've done, as being very, very integral to their re-election chances. And so that's a lot of pressure on them as they're already dealing with some very tight deadlines.
Okay, AOC was talking about tax the rich last night. I thought she was going to wear, a gown that said something like keep salt or the salt deduction, whatever it is. Biden in Section 170A of the Internal Revenue Code. Give us a brief here on the salt debate.
So at this point, there's been a giant push from Democrats, most of them in New York, New Jersey, as well as California, to either raise the cap from its current $10,000 limit or just eliminate the cap altogether. Remember, this cap was new as of 2017, something Republicans put in and Democrats have been pushing against. We didn't see details of it yesterday when House Democrats rolled out their bigger tax plan. Chairman Richard Neal says that's something they're still working on finessing the details of. Here's the big thing, Tom. Even though a lot of Democrats do want something to change with the salt cap, every change they make is more money that they have to figure out a way to cover through other expenses. You raise that salt cap, the government loses revenue. And so there's a big debate on how to make that work, because it's becoming more and more clear, even to progressive Democrats, that whatever they spend in this bill is going to have to be offset with new revenue into the government.
Emily, perhaps AOC's dress gets a lot of the attention. However, Biden's allies in Congress have pushed back and really stripped out a lot of the taxes, particularly with respect to individuals, in some of the provisions based on how much taxes his allies have been willing to raise. What is the size of the reconciliation bill that we're looking at?
That's such a, Lisa, that's the $3.5 trillion question, right? I mean, we're hearing Manchin say $1 trillion or $1.5 trillion. You're hearing Bernie Sanders say $3.5 trillion is already a compromise. I think it's really instructive to look at what House Democrats have put out yesterday. Their proposal would raise $2.9 trillion in revenue for the federal government. If they want to make sure everything's offset, that means they can only spend $2.9 trillion. Now, of course, we're still early in the process. Even though we've got deadlines coming up, there's still a lot of negotiation that needs to get done. If we're already seeing that amount come down, it could signal that the amount's going to be coming down even further. I think when I talked to Senator Joe Manchin yesterday, he mentioned inflation concerns. He mentioned questions about what's going to happen with COVID. So I get the sense that he's certainly going to be watching the CPI numbers later today, and that could further influence the debate as far as exactly how high this price tag needs to be.
How big is the middle versus the ends of the Democratic Party right now?
There's definitely a lot of tension there. I mean, when you hear how the two sides talk about each other, maybe not the lawmakers themselves, but the wider Democratic Party, the consultants, the organizers, the activists. I mean, you've actually seen progressives go ahead and attack moderates, and moderate groups go ahead and attack progressives. But at the end of the day, there is kind of a wide sense that they do need to pass something, that they're all going to look very bad and have egg on their face going into the midterms if they don't pass anything at all. So there is a sort of a mutual agreement that something needs to be done. And right now, everyone's playing hardball. I've talked to lawmakers who said, look, this is the time if you want to dig in your heels, negotiate on something, really push to get something in, take a hardline stance. Now is the time that you need to do that, because now is the time that things are getting written. But after that, there's certainly going to be a big push for unity, for Democrats to come together and to make sure that they pass something. Otherwise, Republicans are going to have an even better chance of taking the House, potentially the Senate in 2022.
Emily, just quickly wrap it up for us. What do you think this inflation data story looks like down in Washington when it comes out in a couple of hours' time?
It's really interesting because some people pay very close attention to these numbers. They will use them in arguments. I'm sure you'll see a lot of press releases from Republicans using that data to further criticize the Democrats' current reconciliation plan. But to a certain extent, for Democrats, they don't see this debate as tied to inflation. They see these things, childcare, expansion of Medicare, elder care, environmental policies, as things that simply need to get done, regardless of what the inflation data currently says.
Emily, thank you. Down in Washington, our Bloomberg government reporter, Emily Wilkins there. Thank you very much. Doug Cash tuned in. Thank you, Dougie Cass. Doug writes the following, Tom. We are in a bull market in complacency. Despite a wide range of possible market and economic outcomes, the bullish consensus believe this all ends well. Their forecasts are optimistic and precise. The S&P is but 1.5% from an all-time high. Tom Keene, the less constructive view from Doug Cass this morning.
Well, that's the market drawdown joke we've been talking about. I mean, you and I have been beating this to death, John, since your 3-week vacation where you worked on the text for drawdown meditation. The bottom line is there's no place else to go. A huge part of Doug's theory is bonds are where bonds are, so everybody's in equities, and at some point, that ends.
Well, Doug is right to bring up this question, Lisa, the wide range of outcomes that we could actually be exploring into next year, not exactly captured by a precise price target at any given bank.
A lot of it has to do with the marginal belief in stimulus, right? I mean, ultimately, doesn't it come down to that? I find it interesting. You keep talking about the fund manager survey, which I think is fascinating. And one of the most interesting aspects is that there's a rare disconnect between asset prices and fundamentals going forward. Basically, their outlook for fundamentals is deteriorating, not for asset prices, still overweight stocks.
Is that rare?
I mean, I guess it's less rare over the past few years.
No, John, what's rare is the Yankees won.
According to their survey.
Win, Tom?
Yeah, the Yankees won. They're behind the Blue Jays of Toronto.
Doug, I think it was, wasn't it?
You know, it's rare. They won.
Inflation data, 1 hour and 4 minutes away in the United States of America. Futures high by just 2 points on the S&P, advancing
It's not rare. The Red Sox lost 2 in a row. It's not rare.
How are you feeling?
I'm traumatized.
How do you feel? Talk to me.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
to recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
It's a little bit snoozy this morning, isn't it? From New York City. For our audience worldwide, this is Bloomberg Surveillance. Just a bit of a snooze going into CPI. Futures doing nothing on the S&P 500. We do nothing on the NASDAQ, nothing on the Russell. What are we doing on your Dow, Tom? Nothing.
The Dow? Yeah, nothing. You know,
nothing.
-5. You know, we're
I mean,
waiting.
as far as I'm concerned, the Dow's always doing nothing. Switch up the board and get to the bond market. 2s, 10s and 30s look like this. 10-year yields higher by a basis point. 134.11 at the close on Friday. Right now, 133.94. We do nothing there as well over the last couple of days. Yields higher by about a basis point. Curve steeper on 30s. 191.60. Tom, capturing the conversation at the moment is this chart right here. For our audience worldwide on TV and radio, it's easy to explain. Switch up the board and get to job openings in America. Ripping, sky high, pushing 11 million. It's a simple story. I'll translate it into really simple terms. Demand's fantastic in America. Demand's really decent. That's the point that Mohammed Al-Aaron is making in the FT this morning. We don't have a demand problem. We have a supply problem. And we can solve this a couple of ways, Tom. Either we settle those supply constraints, in the words of Ethan Harris over at Bank of America, and payroll surge, or we don't, and wages get hotter. And they're the two scenarios we need to talk about. There's another one as well we can have a discussion about, Tom, but they're the two scenarios that could take policy at the Fed one way or the other.
Headline, Amazon, 125,000 bodies. Start
$18.
pay, 37,000 a year, 18 an hour.
Does that get it done? Do they need to go to 20?
That's the new reality.
Yeah.
Do they need to go to 20? Dead on. Dead on.
Then does it have to go higher from there? Does that change the game for the Federal Reserve? Now, Tom, we're going to have a conversation with Matt Hornback in just a moment about delinking QE guidance on rate guidance. But TK, if that starts to complicate things, if inflation starts to be just a little bit more persistent, can they really delink the two? Does it complicate the communication going into the new year?
You're on the edge of Lisa here. Like, it's way too much gloom for me.
I took a lot of hate mail from Bramo's Bears overnight. I just want to speak to them. Just want to speak to them.
How's that going?
It's okay. We're on the same page. Job openings in America pushing 11 million. That's the cross-asset price action. Let's get you some single moves this morning. We can do that as always with Romain Bostic. Morning, Romain.
Hey, good morning, John, Tom, and Lisa. All right, I'll take a look at some of the movers today. Let's start off with Oracle. They actually reported earnings last night. Remember, this is a company that's really about transition here. It's still the second largest software company in the world, but it's been losing a lot of ground to Amazon, Microsoft, and a lot of these cloud competitors. Remember, Oracle was a little late to the game with trying to transition its customers away from those physical servers on site to those cloud-based servers here. They're now trying to do that. Unfortunately, growth coming in at about 3.8% in the most recent quarter. That's a little light than what the street was looking for. They're guiding for 3 to 5% for the current quarter here. That's relatively in line. But again, a lot of concerns here about the competitive pressures. Those shares down about 2% here in the pre-market. Keep an eye on Applied Materials. A big downgrade over at Susquehanna. Applied Materials, Lam Research, all getting downgraded, saying the days of beat and raise quarters are behind them here as the right sizing now starts to take place here for some of these chip equipment makers. And then finally, keep an eye on Smile Direct Club. I thought this was interesting here. The shares rallied 16% yesterday, but the volume was through the roof. Second biggest volume day for the company in its history.
Are they a meme stock?
Well, maybe they are now, Tom. There's no news on this company. But again, the volume second biggest for this company since they had their IPO back in 2019. Those shares up about 10% here in the pre-market. Flip up the board, that drip, drip, drip coming out of China with regards to the regulatory rhetoric. That continues now weighing on NetEase. Some language here coming out of China saying that new laws could be written with regards to miners and the internet. This seems to be an extension of language that they've already used before. Those shares down 2% here in the pre-market. And also keep an eye on Las Vegas Sands and the rest of the casino stocks. There was some interesting commentary out of Macau saying that the government there wants to have more direct supervision over casino operators and actually wants to encourage more local ownership. So Las Vegas Sands, Wynn, Melco, MGM, a lot of the U.S.-based companies that operate in Macau, lower here in the pre-market. Las Vegas Sands, the worst, down about 5% right now, Tom.
Romain Bostic, thank you so much. Picking up the pieces off the Apple soiree this afternoon on the close. Right now, one of the toughest jobs on Wall Street, Matt Hornback has to synthesize global research at Morgan Stanley, head of global macro strategy, also senior vice president herding cats. We're thrilled he could join us this morning. Matt, I want to go to the pro level of your note where you've got gibberish like maintain 10-year JGB ASW versus 3-month Delta Tibor. Okay, it's Greek to me and everybody else as well. You go to the heart of it. Watch the Fed. What is this distinction between tapering and tightening?
Well, Tom, thanks for having me on. And what a segue from JGB asset swaps into Fed tapering. Look, I think the issue for the Fed is that when they're tapering their asset purchases, they're technically not tightening monetary policy. They're simply easing monetary policy by less and less with each subsequent taper. The issue for the market, however, is the conditional probabilities between tapering and rate hikes. In other words, in order for the Fed to hike rates, they need to taper their asset purchases. So the first step towards rate hikes is asset purchase tapering. It doesn't guarantee that the Fed will reach the end goal of actually tightening policy and hiking interest rates, but it's a necessary first step. So I think the Fed is going to have trouble decoupling tapering from rate hikes, because ultimately, it's that necessary first step. So that, I think, is the communications challenge facing the Fed today.
They clearly want to aggressively de-link any kind of taper decision from guidance on rates. Matt, that's what you're getting at, and Chairman Powell is making that effort. Are you confident that the data will be there to allow them to do that?
John, we are confident that the data will be there to allow the Fed to march down this path, starting with the meeting next week, where we expect the official advance notice of tapering to come out of Chair Powell's press conference. That, I think, actually could be quite interesting. The questions that he will get asked, of course, from Mr. McKee, I'm sure will ask a very pointed question about the modalities around that tapering process. That's going to be important for the marketplace, because right now the consensus is pretty firm around this idea that tapering will look like it did back in 2014. It's not entirely clear to me that we should be so confident that it will play out in exactly the same way. There's certainly a possibility that the data could be strong enough, particularly on the labor market side of the equation, where we actually get a faster taper than what we had back in 2014.
Matt, how important is the CPI print today for the Fed and for, frankly, your call when it comes to treasuries?
Lisa, I'm really glad you asked that question, because I do think that this number is important. In particular, what we see developing in owner's equivalent rents, or the rental components of the CPI basket, we think will continue to show strength. And ultimately, even though the transitory components of the basket, like used car prices, will almost certainly come down, we think that those could be offset to a certain extent, but an important extent, by the continued rise in owner's equivalent rent. What's more important for our call, we think, is how all of this inflation data ends up affecting inflation expectations from here. And a data set that we got yesterday from the New York Fed showing that inflation expectations have reached a new high in their survey, that to us is the real key for the tapering process, how quickly it evolves. That's what we think FOMC participants are particularly focused on today.
Series high since 2013. I took note of that as well. I think many of us did. Matt, let's get to the call then. High yields, stronger dollar. Can you walk me through the stronger dollar?
Absolutely. The higher yield story in the United States, for example, can't occur to the extent that perhaps most investors would like to see yields rise without Europe participating. But in these early stages of this process that we think is going to play out, we see a decoupling between U.S. interest rates and those in Europe. In other words, we see U.S. interest rates rising relative to interest rates in Europe. And as that decoupling process plays out, particularly in real interest rates, that we think will put a boost to the U.S. dollar vis-a-vis the euro. So we remain bearish on euro dollar, John. Our current target is 114. We were targeting 117 before. It got to that target. We've reassessed. We think it can go further. So we're targeting 114 on euro dollar.
Matt Hornbeck, thank you, sir. My cousin from my mum's side.
Yeah, hold on a
Tom.
second.
We can do the side by side.
Yeah, please
it's true.
do this side by side.
My cousin from my mum's side Matt's mum, my auntie.
Wait, seriously?
Seriously, yeah. Matt Hornback over at Morgan Stanley. I've been very open about that over the years.
Well, yeah, I can see.
Matt, we grew up together.
It's quite
I'd come
obvious.
on vacations in America, and Matt would come to the UK when we were younger. Matt Hornback over at Morgan Stanley. Matt taught me everything I know about the bond market. He used to bully me when I was a kid.
Okay, for
Where
those...
are treasuries? What are treasuries?
Okay, for those on radio, they're wearing the exact same outfit, and they've got the same glasses.
It's a true
They're both
story.
the same, you know.
Well, we planned this today. Matt's going to
Hairstyle.
catch up, mate. Talk soon. Matt Hornback, Morgan Stanley, head of global macro strategy on this bond market, this FX market too, Tom, looking for a stronger dollar and higher yields.
I'm speechless, John. I had no idea.
You didn't know that?
You know, well, you know,
I learned something new every
I look
day.
at the
I thought
Morgan
you looked great.
Stanley disclaimers. You know, he doesn't own the shares, and at the bottom it says that I'm
course.
related to John Farrow.
Yes,
you know, I
will
see
read
that.
the small print.
I didn't read the small
I don't own
print.
Morgan Stanley shares either
I'm
for
sorry.
that reason, because Matt's over there.
John, look. All of the research, all the back and forth we've got from, you mentioned Anthony Dwyer before, down to the gloomiest of the gloom, say Doug Cass, is, well, guess what? Everybody's got a narrative, and that's what makes this thing go. That's what makes us go on radio and TV. John, you know what? Nobody has a clue.
No one has a clue, TK.
I'm sorry.
I think you've really hit the nail on the head. For me, the range of outcomes is incredibly wide. Doug Cass made that point this morning. I totally agree. This is one of the most fascinating points for the global economy, I think, going back
We're in a
to
pandemic.
the Eurozone debt crisis of 10 years ago. The range of outcomes, Tom, is just so incredibly wide going into next year, except we seem to have this faith that policymakers get what they want. Bridgewater raised this question. We have lived in a world for a long, long time where policymakers have been able to get what they want.
Yes.
Will this Federal Reserve be able to get the employment outcomes it wants, or will it be overwhelmed by what happens with some of the data we get at 8:30?
There's no question about it.
8:30 Eastern Time, CPI in America.
It's we're in a natural disaster. I mean, Auckland, again in lockdown in New Zealand.
I
What
know,
else
Tom.
do you need to know?
The elimination strategy in places like New Zealand and Australia is just so different.
Tots can't shoot the ball.
We haven't done Premier League, have we?
They only had 2 shots
Later in the week,
last
Tom.
weekend.
Later in the week. Futures unchanged on the S&P. CPI in America, 50 minutes away. This is Bloomberg.
With the First Word News, I'm Leanne Gerrans. President Joe Biden is urging California to send a message to the nation by keeping Gavin Newsom as its governor. Newsom faces a recall election today. Polls show he should indeed survive the vote. The president appeared with Newsom and repeatedly linked the leading Republican candidate Larry Elder to former President Donald Trump. Now, Russian President Vladimir Putin has gone into self-isolation. He was exposed to several people in his entourage infected with the coronavirus. A spokesman says Putin is healthy and tested negative for the virus. More people are back at their desks in London's biggest financial district than at any time in the last 18 months, according to data compiled by Google. More than half of the employees in the City of London were in their offices on Thursday. It had emptied out in March of last year when the pandemic led to government lockdowns. China will draft internet rules for the protection of minors. That comes from the Xinhua news service. Beijing will reportedly set up a nationwide platform to deal with online rumors. The government also seeks to have Marxism rule online content. Propaganda will be strengthened based on the Communist Party's achievements. And the maker of TurboTax and QuickBooks software, Intuit, has agreed to buy email marketing firm MailChimp. The price, $12 billion in cash and stock. The deal will let Intuit increase the services it can offer to companies looking to reach customers online. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700,000 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Last night we were at a dinner at a restaurant, and as we were walking out, a man walked over to me and said, "Thank you very much. You paid for my daughter to go to college." And basically, I get that all the time. It's the most unbelievable thing. That's my job.
We can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Markets in a deficit. You've already exhausted the pandemic inventory glut. So you're slowly getting to a point. You get any type of disruption as you go into the autumn, the potential for oil prices to explode to the upside is increasing, particularly if you don't get Iran.
Jeff Curry of Goldman Sachs joining Francisco Blanche of Bank of America, bullish on crude. It's another day of gains on crude from New York City this morning. Good morning. Here's the price action for you alongside Tom Keene and Lisa Brambitz. I'm Jonathan Ferro. Crude up by 0.5% to $70 and about 80 cents. We advance about 30 cents on the morning. Into the bond market with yields higher by about a basis point to 133.94, just south of 134 going into the CPI print. 42 minutes away with equity futures, Tom, totally unchanged on the S&P, on the NASDAQ. We're down a tenth, and on the Russell as well.
Yeah, some real tension here. We'll get the CPI report and see. Right now in the equity markets, David Wilson, compare and contrast, not the correct index, the Standard & Poor's 500, but the one that matters, the Dow, and the one that people really care about, the NASDAQ 100.
Yeah, absolutely. And when you make that comparison, as Ari Waldover at Oppenheimer did in a report over the weekend, you find out that the NASDAQ 100 is at its highest level relative to the Dow since March 2000. And we all remember what happened then. It was the height of the dot-com years.
They were too young. We remember.
Yes.
Is it the same now?
Well, I mean, you can argue that question. Certainly, technology companies dominate the NASDAQ 100. They're represented in the Dow as well. Let's not forget, Apple and Microsoft are there.
Wow, look at that chart.
Yeah.
On radio, something to see.
Absolutely is. But Wald's take is that, growth is beating quality. That's what this ratio at least suggests to him. And, we've seen it move up 16% in the last 4 months. This is where we got to the point. We're back at the height of the dot-com years. So, he figures go with the trend and stick with growth. Okay. I mean, whether you do that or not, considering the historical comparison is another matter.
Dave, we got to keep it short today because we are in China where there's a restructuring as well. You can't use the dreaded B word right now. We're not there yet. Right now, let's assess the capital structure. Enda Curran joins us, our Chief Asia Restructuring Correspondent this morning. This is serious stuff, and it's social stuff as well. Enda, what is the social outrage, the political, the people outrage in China over Evergrande's collapse?
Well, we are seeing sporadic protests now, Tom, against this. People protesting against what kind of repayments they might get for wealth management products. Will the apartments that they've bought be built, for example? There is a social side, there's the economic aspect to it. What does this mean for China's real economy? And it does seem like events are starting to move fast now. We had that news today that they've brought in some heavy hitter restructuring experts, which does suggest China's on track for a pretty major restructuring of Evergrande. But the details, of course, which we don't yet know.
And this comes at the same time that the economic growth seems to be slowing down in China. We're going to be getting additional numbers later today, early tomorrow over in China. On that point, there is a question of the tolerance of Xi Jinping to continuing this effort to try to deleverage the economy with this kind of backdrop. What are we expecting in terms of measures to either support Evergrande or pump more liquidity more broadly into the economy?
Absolutely right, Lisa. This goes to the whole thesis that the authorities have been pushing, one about more financial discipline and pushing back against, the kind of massive borrowing that we saw last decade. So the question marks do become, how much of a loss will the authorities allow investors to hold? How steep will their own intervention be? I mean, a lot of economists viewing this still think that a bankruptcy is unlikely, but nonetheless, there is going to be a fallout. There is going to be pain. The markets have already turned very negative on it. They're expecting the worst. And of course, the spillover then will be, how does it impact real estate? That accounts up to 30% of China's economic output. So there are certainly very many tentacles on this Evergrande story in terms of how it spills over to the financial system, how it spills over to the real economy, and of course how it spills over to real people on the ground as well, as Tom mentioned.
Social unrest, the issue here, and as Tom mentioned, it's not the B word, it's the P word, it's protests. And how bad were those protests around this story in the last couple of days?
Well, China is not unusual to have sporadic protests in China from time to time, but at the same time, it's not exactly what the authorities want to see either. I mean, socialist stability goes to the core of what the Communist Party is all about in Beijing. So that's why we're getting this sense now of a degree of urgency, Jonathan. We had this announcement this morning of the appointment of these new restructuring advisors, including Hula and Loki, which advised in the Lehman bankruptcy, for example. So there's a sense now that the authorities are moving on this, and it's moving in one particular direction. And of course, they're under pressure to act. They don't want to see scenes of protests in the street. They want to make sure that this is resolved. We have some big repayments due for Evergrande in March of next year.
And I don't want to catch you unawares on this, but I think it's a timely question. There is a significant distinction between the old world and across the Atlantic to the new world on bankruptcy. What is the character and nature of the word bankruptcy in China? It's a new phenomenon, actually, isn't it?
Well, it's a different legal system, Tom, and it will be quite different. Don't forget, for example, onshore creditors will be treated very differently to offshore creditors. Offshore creditors don't have any recourse on assets in China, for example, but that's well established and that's well known by the foreign investor community. And I think that's why there will be so much interest to see what kind of a shakeout does come from Evergrande. How will this debt be restructured? What will happen to the onshore debt? What will happen to foreign currency debt? And it is shaping up clearly as one of the seminal moments in China's credit markets, and it will define the whole direction of this financial discipline story that China has been preaching for years now. How much pain will it inflict on the company and the real economy, or how much will the state intervene to prevent that?
Enda, thank you, as always, for staying up late and bringing us that news. The reporting coming from Enda Curran there, Bloomberg's chief Asia economics correspondent. The question we're always exploring, trying to work out how the dominoes fall. One domino, Tom, that's almost transparent right now because we don't know what it looks like. Who owns the debt? Damian Sasser of Bloomberg Intelligence was making this point. It's a bit of a black box. Don't really know
huge
who
black
owns
box. Oh,
the
no,
debt.
no.
So if you're trying to work out how the dominoes fall, You need to know what the dominoes are, don't you?
Yeah,
Who owns the debt?
I don't think it's a bit of a black box. I think this is a huge, huge black box. John, I'll go back to the Waldorf Astoria ballroom, sitting there with Jack Ma on stage telling us how wonderful Alibaba was going to be. I was polite. I kept it. I think Matt Winkler turned to me and put a roll in my mouth so I'd shut up. And, it was interesting. We've come all the way from that to what we're talking about right now.
Well, he had to be quiet pretty quickly, didn't he, Tom? He got more than a slap on the wrist.
Yeah, and you can extend that out. I'm not extending it to Evergrande. I don't mean to associate Mr. Ma with Evergrande, but nevertheless, these are serious things. And the nuances, folks, of journalism here, it's a big deal that Bloomberg says in our reporting, restructuring versus other terminology, including bankruptcy. We try to be careful on that, John.
And we should be. But this was the bearish scenario that many people had painted for many years, Lisa. And yet this market, I find it really, really compelling, interesting rather, that we've seen very little spillover from EM to DM off the back of this conversation.
And frankly, spillover within the emerging market complex from China. This seems to be an isolated event. There still, though, is faith that the Chinese officials will come in to some degree, and you have to wonder what happens if they don't, or if they don't step in enough. Then do you start to see more ripples?
Futures this morning are not doing much at all. We're down 6. We're negative a little more than 1/10% on the S&P. Bond yields look like this, higher by a basis point to 133.94. Counting you down to inflation in America at that data point now, 34 minutes away. Full coverage on Bloomberg Radio, on Bloomberg TV. Heard on radio, seen on TV. This is Bloomberg Surveillance.
Boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
It's such an interesting new world.
The world is changing. For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
I think the Fed has already started to change their signaling.
The problem with this recession is that most of our policy tools are already exhausted.
The market is not ready for the market going up. We've had massive amount of inflation in this era of easy monetary policy and zero interest rates.
The messaging of what they see going forward and what tapering means will be very, very important. Right now, the market doesn't care.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. There is only one topic. It's not the markets. It's not bonds. It is not the Met Gala. It is inflation. We're going to get to that in 29 minutes here. This time, a different report and a higher inflation. John, I do want to interrupt before that, as Nicholas is on Houston. John, it's not a hurricane. It's not a tropical storm, but I think we're sort of hurricaned out in the Gulf of Mexico.
We are
it's
being
still
warned, though,
news.
Tom. It could bring in life-threatening flash floods expected across the deep south during the next couple of days. So if you're down there, of course, stay safe, TK. That's the message from all of us.
Moving east, going right down out of I-10 as well. We'll have, of course, more reports on this through the morning. John, to inflation, we've got to get to it. 5% is not 2%.
30 minutes away, and it persists in a way that I don't think many people on the FOMC anticipated, TK, at the start of this year, going into year-end. The question we have, to what degree does it persist into the new year, and to what extent will it have to change the message at the FOMC? There is a comfort right now with Fed policy. Why? Because there is a belief that they can divorce guidance around QE from guidance on interest rates. Inflation could complicate that going into the new year, Tom.
Yeah, I'll say, Lisa, triangulate this with $18 an hour at Amazon.
I think what it shows is that the wage gains that are being made and, frankly, the jobs that are being offered are on the lower end of the spectrum. And how does this sort of change the dynamic going forward? On the inflation point and the storm point, let's bring those two together. The storm that we saw, Hurricane Ida, actually brought a lot of oil offline. And this has actually led to an unexpected dearth of oil, which has actually led oil to rise higher and faster than expected. At the same time, people looking at the income in the income brackets in terms of what the CPI elements are, how much is this broadening out from idiosyncratic into a broader swath of prices rising?
Let's do this in 30 seconds. Your personal inflation statistic. Mine is a one-bedroom apartment in New York. John Farrow, I've been stunned at how one-bedroom apartments have lifted in New York.
If you have a doorman, Tom, rents are flying. If you don't have a doorman, they're not. That seems to be what the data is suggesting.
What do you see in inflation? What's your inflation number?
I'm with you, Tom. Look, mine is food. And it's food and energy. It's the stuff that they want you to strip out, but it's the stuff that people feel.
Yeah.
Expectations are changing. That's real. That's a psychological change, a real change that could impact the thinking of the Federal Reserve as well. If it persists, it's just started.
Yeah. Lisa, what's yours?
Eating at a restaurant. Going to the food element, but also adding in the fact that labor is costing a lot more and the lack of labor available to a lot of these restaurants. They're all understaffed and the prices have gone way up.
TK complaining about the service too. Is that where you're going?
I'm not complaining about the service.
Just asking.
The lack of people who are there. I mean, every waiter who actually comes up and says, I'm the only person here waiting on all of these tables. I mean, it happens all the time.
No shock here, but anecdotally, we're leaving tables and we're sitting more at bars just because you can get better service.
No, I'm not shocked, TK. You're right.
You're not shocked about that.
I'm not sure that's
John, let's do the data
change.
check here. We're going to go Met Gala free in this hour. Let's do the data check, though. Futures -4, Dow futures -36. John, the VIX still above 19.
NASDAQ futures down 21, negative a little more than 1/10%, and yields higher by a basis point or two. 10-year really hasn't done much since Fed Chair Jay Powell spoke at that virtual conference in Jackson Hole, Wyoming. 134.11, Tom, going into inflation. 26 minutes away.
26 minutes away, and we're looking here at the dollar flat. I thought that was really interesting. Matt Hornback on a stronger dollar. Euro down to 115. On the equity market, Christopher Grisanti joins us right now with MAI Capital. Troy, usually I'd start with a general phrase, Chris, but I know you're going to be hanging on every word at 1 p.m. on Apple. Can you own Apple here? You've been a long-term affiliate of Apple. Can you go long Apple right now?
Sure, Tom. I think if you're a long-term investor, you know, there's hardly a better run company, hardly a better company with market position. Having said that, we don't currently own Apple. We prefer some of the other FANG stocks, mostly because it's a combination of valuation plus they've almost outdone themselves. I mean, the iPhone is so good that we're not expecting much from today's launch. I think a few incremental changes, a better camera. So, you know, I'm a little afraid that at this lofty valuation of 30 times, that's gonna disappoint.
Can we get to the story over at Amazon? Chris, is that a stock you hold?
It is.
Can you tell me why in a world where they might have to pay up a lot more for labor? This is a big employer in America now.
Sure. Well, Jonathan, there are so many ways to win. I mean, clearly this is old news, but just point to AWS, Amazon Web Services, where they created, you know, a multi-billion-dollar company out of nothing, and that we estimate is now worth about $400 billion. So there's that. There's Prime. There's the international growth. So sure, just like every other corporation in America, they're going to have to pay more for labor. That doesn't mess up our investment thesis. Maybe it cuts the margin 1% or 2%, but I think long term, I'm pleased to be a holder of Amazon.
Chris, you've been a bull, and you've been an unapologetic bull, and you're saying that all of the pessimists right now want to sound smart. However, that has not been a good way to make money. When you talk about making money, why do you like Boeing? Why do you like some of the outliers that, frankly, continue to be souring in many people's views?
Sure. Well, as Tom always teases me, you know, I'm a contrarian, so it's very hard. Buying stocks today is like going to the produce department in the market at 6 o'clock at night. Everything is picked over. It's really hard to find something good. So Boeing has a lot of hair on it, but believe me, it's Sasquatch basically. But if you look 3 to 5 years out from now, when COVID is a grim memory, where the middle class all over the world is looking for more airline seats, and there's only 2 companies that can satisfy them, I think Boeing, which is selling for half the price it was 2 years ago, is one of the few attractive things in the market today.
Well, let's talk about Boeing. Is it a cyclical?
You know, it didn't used to be, Tom. It's funny, if you do a regression analysis, and you'll love this, you're a stat guy. If you do a regression analysis against Boeing, in the last 2 years, it correlates very closely with the airlines. But for the 5 or 6 years before that, it does not. And in other words, in good times, when we don't have a worldwide pandemic, Boeing's not a cyclical. It's a world-leading manufacturing company that has terrific margins and terrific returns on equity. So I think it's a chance to buy a great company that's being labeled today as a cyclical.
Taking a step back, Chris, when you talk about being a bull in this environment, it really does come down to relative valuations in addition to a fundamental story. But how comparable is the relative value story at a time when people think that bond yields are going to go up, at a time when, frankly, there is so much economic uncertainty and such varying views on the path of inflation going forward?
Well, you know, Lisa, I think it's somewhat ironic that people seem more scared now than they were 9 months ago, even though the market 9 months ago was selling at 27 times forward earnings and now is at 21 times. I'm not making an argument that that's cheap, but I am making an argument that it's cheaper now than it was 9 months ago because of strong earnings growth. And I think that trend over the next 6 to 12 months will continue. There's a lot of cross currents, inflation being the number one that I'm afraid of, but more next year than this. You know, in the Delta variant and the crummy August jobs report. But, you know, those are the things that create opportunities. So
there was some faith back then, though, Chris, as you know, that we'd grow into multiples, Chris.
Inflation.
And we've grown into multiples, as you indicate. Earnings have grown really quickly. Do you think there could be a threat to multiples, though, in a world where the Federal Reserve might be forced to pull back a little bit earlier than anticipated?
In that world, yes, but I don't think we're living in that world, Jonathan. I think the Fed again and again and again has said, you know, damn the torpedo, full speed ahead. They don't care about 5% inflation, at least not right now. Their sole goal is to get us out of the COVID pandemic. And look, next year is a different world, and I don't I don't doubt that you and I are going to be sitting here talking about wage inflation and other things. But the backdrop right now is a Fed that has the pedal to the metal, and inflation is down the list of worries.
Chris, got to leave it there. Smart as always. Good to catch up with you, sir. Chris Crisanti there of MAI, Capital Equity Strategist and Senior Portfolio Manager. A reason for confidence, Tom, from Chris on this market.
Well, we need that. There's been a lot of gloom out there. I go back to the Bank of America survey, folks. It's just a survey, but it really captures the emotion that's out there as we grind through this 3 hours a day.
It's about expectations, and expectations for higher profits, Tom, they've diminished. And Lisa, for higher growth, they have diminished as well. And let's be clear here. I mean, that's pretty right, isn't it? I mean, we're expecting a deceleration. It's fairly in line with the consensus. I don't think there's
sound like 90 days ago, John.
Well, look, people have been expecting a slowdown. However, the slowdown has been faster than people expected. And frankly, it doesn't seem to be compensated for in fourth quarter data. That is a big shift. However, if you talk to every fund manager, their big fear is inflation. So if they've got lower inflation expectations going forward, that ends up being a positive for markets. It's sort of either way you play it right now can be skewed as a positive story.
I'll catch up with David Jones of Bank of America on that survey at about 9:40 Eastern Time on Bloomberg TV. Looking forward to doing that to get the view from David. They don't always follow the fund manager survey, of course. They come up with their own trades off the back of all of that. So looking forward to getting their views. In the equity market, futures down 5. We're negative a little more than 1/10% as we wait for that inflation report.
Yeah.
That comes in 19 minutes and 23 seconds. In the bond market, Tom, going into that, yields are higher, 133.94 on a 10-year in America.
Yeah, I'm looking at the Cleveland adjusted here. You got the Dallas trim as well. I mean, how are all of these going to sift out, John? To me, that's a real important
Can we
question.
keep doing, though, that exercise, Tom? I think some people are frustrated with that. That's not the world that people live in.
John, Cleveland inflation is 2.28%. Nobody listening or watching believes that number.
Exactly. Can you keep cutting out the stuff that you don't like to see?
No.
That's not what people experience.
That's where we are. We're going to be there in, 17 minutes? It's going to be interesting, John.
That headline number starting to shape expectations a little bit more. That's something to keep an eye on. Such a polarizing debate. So divided in the world of economics over this at the moment. From New York City this morning.
Kim Kardashian's dress.
Good morning. Balenciaga. I know you're a big Balenciaga guy.
I am. I love it.
Yeah, I think somewhere at head office at Balenciaga, they're just sitting there laughing all the time. What are they charging for those shoes, TK?
I don't know. Brian Boyd told me it's a lot of money.
From New York, this is Bloomberg.
With the first word news, I'm Ritika Gupta. Tropical storm Nicholas came ashore in Texas early today, and now it's slowly moving towards the Houston metropolitan area and is bringing torrential rainfall that is also threatening to flood parts of Louisiana, still recovering from Hurricane Ida 2 weeks ago. Those floods are described as potentially life-threatening, and they're expected across the deep south the next few days. Wall Street executives and top Chinese regulators will hold a virtual meeting on Thursday. On the agenda, Beijing's crackdown on the private sector that has roiled the markets. They will also discuss U.S.-China relations. Blackstone chairman Stephen Schwarzman was invited, along with Goldman Sachs president John Waldron. In the UK, a panel has recommended giving coronavirus booster shots to people 50 and over, along with other vulnerable groups. It urges the shots begin this month. The British government is trying to increase the immunity of its population and prevent a potential surge in cases this winter. Amazon is going on a hiring spree. It will hire 125,000 workers for transportation and warehouse jobs in the U.S. Amazon will offer an average starting pay of more than $18 an hour. The company also will offer sign-on bonuses of up to $3,000 in some locations. Boeing expects global jetliner sales to bounce back from the pandemic late this decade. That would contribute to a potential $9 trillion market for aerospace and defense products and services, and that's 5.9% larger than what Boeing forecast last year. Still, the company warns that the recovery could come in fits and starts. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
do you think your synchronized swimming skills help you as the head of the European Central Bank?
Yes, they do, actually. If each individual is brilliant, it's great. But if they don't work together, you will not get the gold medal.
I want to ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
It's the end of the Merkel era in Germany. Election of new leadership is coming. Join Francine Lacroix as she speaks with some of Germany's most powerful voices before the votes are cast on Germany Decides CEO Briefing. A live special Wednesday on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think, Apple is usually want to even out their supply chain and have stuff ready shortly after, announcements come out. There will be some high-priced iPhones, make no mistake about that. I mean, if you took a look at that iPhone Pro Max, that's going to be hovering around that $1,500, $1,600 price point, at the most.
The big reveal today, that was Ramon Lamas there, the IDC Research Director from New York City this morning. Good morning, alongside Tom Keene and Lisa Bramett. I'm Jonathan Ferro. Here's your price action going into an inflation print in America, 12 minutes away. Futures are -3, down not even 0.1%. Yields are higher by a couple of basis points to 134.45. Tom, let's do photos on radio. That works well, doesn't it?
It does so well.
We can do that right now.
10 years ago, 8 years ago, 7 years ago, whenever it was, the iPhone's going to fail. We had full team coverage here. Years ago, Matt Miller out in the rain, me in the studio, we were both dry. And it was, again, the iPhone is going to fail. Apple is going to fail. It's gone 5 to 149 in the last, I think it's 10, maybe it's 12 years. Will Power joins now, Baird's senior research analyst. He knows if you sell Apple, you're usually miserable. Will Power, should I sell Apple this morning?
No, sir. We continue to like the Apple story. And I guess right behind me, as you can see, we've kind of got the graveyard of devices that Apple's eviscerated over the years. And look, our bet is that the power of the ecosystem is still as strong as ever. So we take the long view on Apple and still like the overall setup.
Well, what do you get out of events like today, these days? What do they mean? I remember 8 years ago it was big. We used to line up outside. The media made a big thing of it. This is what Tom's getting at. What's the change now? Is it useful? Is it instructive of anything?
Well, look, I think the benefit is the regular cadence that they deliver and consumers have come to expect, at least with respect to iPhone and now some of the wearables categories. And I think folks do want to know, what's on the horizon, but particularly in these one-off, so-called S years, as consumers have become accustomed to, the changes are typically, more incremental, right? So the event becomes bigger in those, every other year periods where the form factor changes more dramatically.
When I buy the stock, what am I buying, Will? A luxury goods provider with a monster margin, or just a capital returns monster?
Well, I think it's a combination of that, right? And that's why we like it. But it's also still an innovation engine, right? I mean, who would have thought that their wearables business could be a $40 billion business, or that services is now approaching $70 billion businesses? And so you're buying, what's been a monster cash flow machine. And this is a company that's going to start to approach $100 billion in annual free cash flow, in a company that has the ecosystem to still power additional technology innovation over time, like a potential autonomous vehicle. And those are the types of things that you play for over the long time.
Will, you mentioned services, and this has been an emphasis for Apple. How does the Epic ruling having to do with the payment for specific apps and whether Apple can really take a bite out of it or allow them to go to their own providers, how much does that crimp their potential revenue going forward from services?
Well, right, it's a good question. Listen, I think you have to kind of back up and look at the numbers a little bit to peel back the onion. While services is growing 20% plus and it's become a big focus of the company, it's still just about 20% of the overall business. And of course, App Store is just one component of that services stream. And so on our analysis, you're looking at a potentially low single-digit percent EPS impact a few years down the road. But of course, that's subject and contingent on potential appeals on the part of both, Apple and Epic, and what the consumer behavior looks like. So, there is some potential, impact, but we don't view it as overly meaningful at this point.
Well, but Will, how much is this just sort of a precursor to many additional moves that are similar going forward, especially as the Biden administration takes a harder look at some of these companies? How much can Apple rely on their hardware side of their business, and how much do services need to overtake in order to justify this company's valuation?
Well, services is a very important part of the story, right? It's the faster growing piece of the story overall, or at least had been, prior to the pandemic, which ushered in the needs for a lot of these work from anywhere devices that, Apple provides, all of us. And so it remains a, laser focus for the company and investors, A, the growth rate, but B, it also generates higher profit margins on average as you look at, gross margins versus the hardware side of the business. So it is important to them, and it helps solidify the ecosystem. And so it is something that, we and investors will continue to keep a close eye on. But at this point, we still, feel good about the broader setup there.
Well, in about 8 minutes, all we'll talk about is inflation. BTIG came out with a call yesterday to downgrade Nike on supply constraints. The focus there for Nike, Vietnam. Can you walk me through the constraints around the Apple iPhone? I imagine it's like the labor market. Demand's really sky high. Can they supply that demand?
Well, that's a great question, Jonathan. And they're not going to be immune to some of the pressures in the marketplace on that front. Of course, they have a CEO who came from the supply chain side, and they've done a great job, probably as good a job as anybody over the years at navigating supply chain challenges. Obviously, this is a particularly acute time and issue, not only for Apple and others. I think our expectation is they'll be able to largely navigate it, but without question, there are going to be, some impacts. And candidly, we don't know fully, how deep those will run at this point. But at the end of the day, the key for them is the demand indicators, which I think, are still healthy. We had a survey out that we put out just in the last week or so as part of the preview, and our view is there's still a really healthy upgrade opportunity, but it could take a little longer, right, for supply to meet the demand.
Well, smart as always. Great to catch up. Will Power, Baird Senior Research Analyst, looking for 170 on Apple. At the close yesterday, 149.55. 36 buys, 9 holds, 2 sells on that stock in the analyst community. Tom Keene, that supply conversation, it extends to pretty much everything right now. Brand Nike, brand Apple, the labor market, demand solid. What about supply?
Well, that's the dynamic right now. It's a huge worry, and certainly the optimists feel that will clear out at some point. I'll be honest, I'm not so sure, particularly coming across the Pacific as so much of Apple product is. John, to me, the big mystery of this is these pandemic revenue numbers, which are ginormous in the recovery, and not only for Apple, but everything else that's overpriced. What does it come down to? Does it come down to 17% revenue growth? Does it come down to 12% revenue growth? Or do we get back to single digit? Is that priced in now?
Don't know, Tom, and also how that revenue number actually falls down to the bottom line. The margin story, Lisa, huge focus for the likes of Morgan Stanley and pretty much everyone now going into the new year.
And to me, this is one of the biggest disagreements among Wall Street strategists, the bulls and the bears, in terms of just how much margin compression there is going forward. How much can they keep passing along to consumers? Again, the fact that forward expectations for inflation are going up as quickly as they are for consumers, definitely got to be a concern for some of these companies.
John, it's really good. Let's bring up the umbrella shot again. For those of you on radio, it's orange umbrellas, me and Matt Miller. This is a few years ago, and John, what's so important about the emotion of this shot, I sold every share of Apple that day.
That was a great trade, Tom.
Thank you.
8 years ago. 8 years ago with Matt Miller. I love that
like
shot.
22
Matt Miller's got that shot out on Twitter.
He's buying Bitcoin there.
A bit of excitement now this morning. Michael McKee has arrived. That means one thing. Your economic data is due.
His entourage is here.
In 4 minutes and about 20 seconds, it's CPI in America, a full breakdown on radio, on TV, going into that CPI print. Yields are higher, the curve's a bit steeper, up 2 basis points on 10s to 134.62. Crude in Chicago, 0.4%, $70.75. The inflation report next. This is Bloomberg.
There is just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia, like Taiwan, where they're having trouble meeting the demand. The supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Last night we were at a dinner at a restaurant, and as we were walking out, a man walked over to me and said, "Thank you very much, you paid for my daughter to go to college." And basically I get that all the time. It's the most unbelievable thing. That's my job.
there is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this like accompanying surge in deaths as well.
From New York City for our audience worldwide on TV and radio, an inflation report in America just moments away. Going into that, futures unchanged on the S&P, down around about 3 points, negative almost 0.1%. Yields higher by a basis point or two. There's your data. Here's Mike McKee.
Well, it's interesting, John, the transitory argument coming through here as the CPI comes in lower than anticipated. The CPI rising 0.3% on the month. That's the headline. And the year-over-year rate falls to 5.3% from 5.4%. The core, which will get more attention on Wall Street, up just 0.1% during the month. And that is compared with 0.3% last month and a forecast of 0.3%. And so the core year-over-year rate drops to 4% from 4.3%. So off the top here, it looks like we may have a bit of the Fed's story being ratified. Let's take a quick look at some of the numbers here. Food prices up 0.4%, and that's been an issue. Now, a lot of people have been looking at other food at home, and it looks like that was up by 0.6, not a big jump. It was up 0.8 the prior month. And so that falls off a little bit. The question was, would restaurants be raising prices because they had to pay more to attract workers? And it doesn't look like that fed through during the month of August. Gasoline up 2.8%. That's something we'll keep an eye on going forward because, of course, oil prices rising significantly over the last couple of weeks. Apparel prices at this point up 0.4. New cars 1.2%. And here's a number you haven't seen in a while.
Please.
Used cars down 1.5%. So a lot of the things we were looking at, not a problem.
You dive into it, John. We got to talk about the markets here with equities on a tear. And I looked at the bond market. It's in about 50 pips right now. But tell me about equities, John.
It's a bit of fuel for Team Transitory, Tom, and it's a lift in the equity market. Up 11 on the S&P. We're up 0.25%. NASDAQ futures rallying a little bit as well. A little lift there, up 25, advancing a bit more than 0.1%. Push it through the bond market, Tom. Yields were higher by a basis point or two. Still higher by a basis point. Let's be clear about that on 10s at least. 133.94. Bit of dollar weakness coming through, TK. Euro dollar firmer, 118.33. Euro stronger. That currency pair up by 0.2%.
Brent crude 74.15, breaking through the 74 level. Michael McKee, one final quick observation.
Well, I think the number that everybody's been interested in is what's happening with housing, and the overall number for shelter is up just 0.2%. Owner's equivalent rent up 0.3, same as last month. So the big increases we've seen in home prices across the country not feeding through into CPI yet. Tom, I should mention the Tom Keene Index, distilled spirits at home up only 0.2.
Thank you for that.
You're doing well.
News you need to know. Michael McKee, really an all-nighter for him, coming off the Met Gala.
For you too, in the Dwayne Reed 24-hour store, Tom.
Well, I saw Ben there, so you know.
Over on Lex drinking beer last night at 1 o'clock. Go on, carry on.
Okay, we'll carry on. Sarah Howes has no idea what we're talking about. She'll save us with Wells Fargo, their senior economist. Sarah, this is an exceptional statement and report for Jerome Powell.
I think this is another report for a second month in a row that does give a lot of credence to that transitory debate. So I think we still see quite a bit of pressure coming through the pipeline. If you look at what's happening both in terms of supply chain on the goods side, what's happening with labor and wages. But I think what we're seeing is that most eye-popping rate of inflation we saw this spring is coming off the boil. And I do think that gives the Fed a little bit more time to await some progress in the labor market.
I look, Sarah, at the labor market and it ties in. How does this inflation report tie into wage inflation? Are they linked?
Well, I think where you're seeing some of the give back in things like used cars prices, I think that is somewhat divorced from what we're actually seeing in the labor market. So even as we did see a little bit of softening in the rate of food inflation, we're still seeing quite a bit of pressure in the restaurant sector, even in grocery stores. And I think if you look at the run rate there in terms of the monthly print, you're still seeing strong numbers. And so I think we are seeing some of that wage pressure begin to filter through. And I think in many areas, it's just beginning to start, particularly in the service side, where it does take longer to show up in the inflation numbers.
What kind of number do you think would make the Fed comfortable at the turn of the year, Sarah? What do you think they need to see? Does a 3 handle get it done? Does it give them the comfort to say, yes, it's transitory, let's stick with this?
I think it's more about the numbers you're seeing in inflation expectations. So yes, we had a very hot consumer inflation expectations number coming from the New York Fed yesterday. But if you look at the Fed's preferred measure, that common inflation index, it's still well within its historic range. So that's taking into account what's happening in TIPS markets, what's happening with the Michigan numbers. And while you've seen inflation expectations pick up, they're still at levels that are overall consistent with the Fed's target. And so I think that buys them time, no matter what you're seeing in terms of the core PCE deflator or headline inflation at the end of the year.
So if you're just tuning in on radio and TV, it's downside surprise time on the inflation print. Team Transitory getting a win here, scoring a goal. Futures positive 0.4% on the S&P, advancing there 17 points on the S&P. Yields not doing much off the back of this number. Lisa, this comes down to one thing now. Retail sales print, then it's on to the Fed next week.
Yeah, I mean, there are a couple ways to read this. On one hand, it could be transitory, the Fed's getting what they want. On the other hand, this could be that perhaps the economy is softening more than expected at a time when we have a prolonged pandemic. Sarah, can you weigh in on what this means if the Fed is not getting what they want, if you don't see necessarily material labor market improvement like we didn't necessarily with a disappointing previous report? What do they do? Do they just keep printing money? I mean, do they just keep buying bonds, or do they have to change their guidance in an additional way?
I think you continue to see the status quo. So I think you just get the taper gets pushed off further. So I think this print suggests that maybe tips the scales a little bit more in favor of December rather than a November announcement. But I think they keep the current policy in place for a little bit longer. You know, I think it's important to remember that while, yes, we did get a disappointing employment report in August, we're still adding jobs. You're still seeing the unemployment rate decline. You're still seeing at least some movement in terms of labor force participation and the supply, even if it is slow. But cumulatively, you're still seeing things move in the right direction. You are getting closer to the Fed's goals. It's just maybe taking a little bit longer, and so that's going to have them keep policy in place longer.
When we look forward to that retail sales figure later in the week, Sarah, what is the consumer able to do at this point, given the roll-off of some of the stimulus checks and the fact that people still are not necessarily getting back into a labor market still hobbled in parts by COVID?
Right. So I think we're going to see a pretty weak number when it comes to the retail sales. Part of that has to do with the fact of what we're seeing in terms of autos, just how much we saw sales plummet. But I think if you look at the overall position of consumers, so we are seeing it weaken a little bit. So balance sheets are still good. You still have excess savings. But given the run rate of inflation of late, even with today's softer number, it's whittling away at those savings. And so when you factor in also the unemployment benefits rolling off, that buying power of consumers is weakening. And so that does suggest that you are at least getting somewhat closer to the supply and demand imbalance coming better aligned. But it's going to take some time.
Sarah, let me talk the unspeakable here, which I believe I haven't heard come up. What if this is a Fed? I'm looking here, folks, at the wonderful FOMC function on the Bloomberg. What if this is a Fed that's not September, not December, but has to stagger to the decision tree of January 26th of next year? What does it signal if they have to wait?
Well, I think it suggests that to some extent the virus is still very much in control. So I don't think it's completely out of the realm of possibility that even as we're seeing Delta cases level off, you get another wave come the winter. And so I think it suggests that this is not necessarily the rapid immediate rebound a lot of folks were looking for earlier this spring. But there's still a lot to work through, both in terms of the virus. There's still a lot of frictions in the economy, whether it's to the labor market or or supply chains, and those are going to take some time to work out. And so the Fed might have to hold course for somewhat longer.
Sarah, thank you. Always good to hear from you. Sarah House, Wells Fargo Securities senior economist, off the back of August inflation data in the United States of America. It is a downside surprise. The monthly reader, the headline number, 0.3% from July. Looking at the headline read year over year, 5.3%. Core CPI, though, TK, stripping out food and energy, core inflation 0.1% month on month, the smallest read we've seen going back to February.
I'm going to steal from Chairman Greenspan. It's a quiescent report. After all the the emotion that we've seen here, Michael McKee will dive into it. I'm sure he'll have much more through the morning here and how it frames up to September 22nd. But John, again, to your point earlier, we got all this fancy stuff. Every single viewer, every single listener is still getting hit over the head.
And they're not looking at the direction of travel. They can feel, Tom, the numbers themselves, and the numbers are still elevated. Equity futures this morning up 1/3% on the S&P 500. Lacey, your take this morning off the back of this. September 22nd, a little bit more comfortable for Chairman Powell and Team Transitory?
Yes, I mean, it seems like that is the case. However, if you dive into some of the elements, this from one listener, that actually if you look at hotels and motels, it was down more than 3%. Airline fares down more than 9%. How much is there a distortion from the rise in the Delta variant and people perhaps pulling back a bit from some of their travel plans? Really, this to me is a key question, John, as people look forward at other things that still are rising. And then again, with oil, the potential for it to increase as well.
And just quickly, a little bit of news out of Goldman, it seems, Tom. Another management rejig, naming Dennis Coleman as the new CFO. This according to Reuters. Not our story this morning, Tom. This according to Reuters, that Goldman has named Dennis Coleman as the new CFO as of next year.
Yeah, well, it's a change of the guard. We saw that huge rejigger at Bank of America the other day, and each of these companies does it. What I would point out is each of these companies in this boom time for Wall Street, John, are in what I'll call strategic turmoil. I don't mean that as a negative thing, but they're under a lot of discussion on the next 5 and 10 years out.
Confirming that here at Bloomberg as well. Goldman naming Dennis Coleman as the new CFO. Getting a win this morning. That'll be the conversation through the morning on TV and radio. We'll continue that conversation with Elise Ossenbach, JP Morgan Private Bank Global Market Strategist. We'll do that very shortly on Bloomberg TV. Heard on radio, seen on TV. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. President Biden is urging California to send a message to the nation by keeping Gavin Newsom as its governor. Newsom faces a recall election today. Polls show he should survive the vote. The president appeared with Newsom and repeatedly linked the leading Republican candidate in the recall, Larry Elder, to former President Trump. Russian President Vladimir Putin has gone into self-isolation. He was exposed to several people in his entourage infected with the coronavirus. A spokesman says Putin is healthy and tested negative for the virus. More people are back at their desks in London's biggest financial district than at any time in the last 18 months, according to data compiled by Google. More than half of the employees in the City of London were in their offices on Thursday. It had emptied out in March of last year when the pandemic led to those government lockdowns. The maker of TurboTax and QuickBooks software Intuit has agreed to buy email marketing firm MailChimp. The price, $12 billion in cash and stock. The deal will let Intuit increase the services it can offer to companies looking to reach customers online. China Evergrande has come out with a dire assessment of its financial health. The struggling property developer says it faces tremendous liquidity strains, and it has hired advisors for what could be one of the country's biggest debt restructurings. Just how much Evergrande's investor lose will depend in part on whether Chinese authorities and state-run banks take steps to limit the fallout. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income. I'm Jonathan Ferro. This is Bloomberg Real Yield.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Bloomberg Surveillance. Good morning, everyone. Futures up 16 off the inflation report. It was transitory. Dow futures up 123 and the VIX 18.61. Lisa Bramlett and Tom Keene with you this morning. Lisa, you wonder with Mr. Paulson over at, Mr. Solomon rather, over at Goldman Sachs, the idea of the politics behind a move. It's just a CFO change at Goldman Sachs today, isn't it?
Yeah, Goldman Sachs named Dennis Coleman as the new chief financial officer as of next year. And this, of course, follows the huge shakeup that we saw over at Bank of America. As you said really well, and I thought you pointed it out very well, that basically banks are rethinking the way that they look in the years to come. That the pandemic was a tipping point for a technological shift in trying to bring up some of the younger ranks in a way that perhaps it hadn't been in the past.
Yeah, very good. Both out of investment banking. Mr. Coleman, very much associated with the United Kingdom as well. Also associated with us is Barry Ritholtz, Bloomberg opinion columnist, Ritholtz Wealth Management. Barry, thank you so much for joining. I love your essay this week on housing. We need a new dishwasher. The sump pump has been used in Hurricane Ida. I love home ownership. Is it worth it?
You got to live somewhere, right? And as someone who's lived in rentals and owned condos and my own house, it's nice not to live in a off-white, no change to any of the living circumstances. The old joke is no one washes a rented car. Nobody improves a rented apartment. So if you want an updated kitchen, if you want to paint your house, a different color or put in new carpet or stuff, ownership is how you manage to do that. A lot of the metrics that show that real estate is a bad investment kind of ignore the fact that as an owner occupier, you got to live somewhere. And that's where homeowners do well.
But, you know, I mean, the home renovation, Abramowitz did a renovation. It was $250,000. But, you know, Barry, when you look at home ownership, what's the actual nominal or real return of home ownership versus owning the Standard & Poor's 500?
In real terms, it's probably flat to negative. Once you work in, you got to pay taxes. There's a ton of maintenance and upkeep. Net relative to inflation, you're lucky if it's a break even, if not worse. But it keeps coming back to what you pay is a key issue. And the thing to remember is if you're putting 10% down and you're not buying the property outright, there's a lot of leverage in that. And so those return characteristics are different than, let's say, Blackstone running around and buying up multifamily units and farmland and everything else.
Tom, just to be very clear, the $250,000 renovation really accounts for basically putting in a new divider for my silverware. So it's not exactly the same scale. I will just say that, just to set the scale straight. Barry, to sort of follow on, though, with this idea, we started talking about banks. We moved to the real estate market, a pivotal moment for urban areas as we try to get back to the office at a time when the variant is really delaying a lot of those plans to get back to the office. How significant is it, the longer that some of these delays go on, for property values in urban centers?
So that's a really complex question, and I'll give you like a 30,000-foot view. 2019, when you look around places like San Francisco and Manhattan, there's a ton of new office space that has gone up to meet the pre-pandemic demand. Suddenly, the pandemic has taught us, hey, we've really been inefficient in how we use our time, both going to the office, commuting, et cetera. And so it appears that there's now an excess of office space and a shortage of, I don't even want to say affordable housing, just reasonably priced housing in major cities. And if you remember, we just went through the 20-year anniversary of 9/11. Post 9/11, Lower Manhattan converted to a very residential area. Lots and lots of office buildings converted. I wouldn't be surprised to see something like that take place over the next couple of years in major urban centers to adjust that imbalance between supply and demand for both too much office space and too little residential space.
So going forward, are you going back to the office? I know we talked a lot about this back in the day, and I'm wondering, given your read on the breadth of Wall Street in terms of what they're doing, where they are working for, what's the zeitgeist right now on that front?
So a handful of companies originally had September 15th as their target. A bunch has been pushed back to October 15th. I've been trying to get into the city at least once a week, and as has all my colleagues in the office. And now there's a chicken and egg issue in that a lot of mass transit has been running on weekend schedules, not normal peak commute schedules. I think a bunch of that, the Long Island Railroad, Metro North, I think that returns back to its normal schedule, or it was scheduled to September 15th. So once you can, I was at a conference yesterday at the Javits Center at the SALT conference, and on the way home yesterday at 2:30, it was bumper to bumper traffic in a car. And I think that's because people aren't comfortable either riding the trains or they're just running too infrequently. Once things get back to normal on the commuter rails and other forms of mass transit, you're going to start to see people move back into the office a little more regularly.
Barry, thank you. How was the SALT conference?
It was interesting. I sat down with Steve Cohen of Point 72 and Dimitri Balasanis, Mike Rockefeller of Woodbine, and Alana Goldstein. Fascinating conversation.
Yeah, nobody cares. What did Cohen say about the Mets?
He's having a lot of fun with the team. He's excited about upcoming changes, and he thinks they are going to be a contender sooner rather than later. It was really interesting discussion. What was fascinating about walking around the event with him is people stopping him to talk about the Mets. No one wants to talk about
exactly.
$20
That's why they buy the teams,
30%
Barry.
a year. They want to talk about the baseball team.
I mean, Barry, when you buy the Knicks, it'll be the same way. Barry Redholz, thank you so much. Bloomberg Opinion columnist. Lisa, you look at what's going on here in the inflation data as well. I'm quite taken, and this is a summary, folks. Equity markets and dollar react, bonds not, right?
Yeah, and bonds might be looking more granularly at what the components are that led to the decrease. You are seeing increases in rents. It's just perhaps that we're seeing the offset from hotels, basically, because those prices went down significantly. Airfares, also a huge component. Used cars, they did see a slight dip, but new cars actually increased in price. I do wonder how much, Tom, this report really does reflect the Delta variant and how it really bled out through people's consumer expectations. But yes, I find this a fascinating report, and I'm not sure what it says.
I agree. It is fascinating, and we will see, and we'll dash to September 22nd as well. On the data front, we do have green on the screen. We're not over 35,000 on the Dow, 34,866, up 109 points. SPX up 15 points. NASDAQ even with a lift as well. Let me move the famed Bloomberg cursor. It's about even percentage moves there. Small caps having a better than good morning. The VIX coming in nice under 19 to 18.61. Gold 17.98 the ounce. Thanks, Matt McClellan, for wisdom with Jean-Marie Eviard at First Eagle. Oil, that's important this morning. Brent crude over $74 a barrel. On the nation's debt, after Barry Eichengreen yesterday with us, Jason Furman, Balance of Power, 12 noon. Stay with us. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's the kind of downside surprise that the chairman of the Federal Reserve will like. From New York City this morning, good morning, good morning. This is the price action. Equity futures with a lift. Off the back of a downside surprise on inflation, we advance a third of 1% on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
From New York, we begin with the big issue. Team Transitory gets a win.
The T word, transitory, the
debate around transitory.
Every time we talk about inflation and transitory, we're going to take an afternoon drink.
It's a bit of a dangerous game.
We had a period where the market was definitely buying into the transitory narrative.
The risk is it's not as transitory as the Fed think it is.
Inflation is rising and is proving pretty sticky.
We're about to sober up pretty quickly.
There's a lot of uncertainty about inflation.
But I will say that the devil is in the details.
Some of the areas like shelter, it seems to be moving higher.
What's important is demand-driven inflationary pressures.
We have to think a little bit more critically about what higher prices from here do.
And to what extent there's a kind of a negative feedback, kind of a second round effect.
That's, I think, a key point.
With early reaction, I'm pleased to say, joining us now is Peter Cecchini of Exotic Capital, JP Morgan's Elise Ossenbar, and Keith Lerner of Truist Advisory Services. Elise, let's begin with you. Your reaction, please, to the early inflation print from 30 minutes ago.
Sure. So I don't think that this changes much for the Fed. You know, tapering is still imminent, and the narrative is still very much that inflation is going to be transitory. We expect these 4 to 5% prints to moderate back down to more moderate levels by the end of next year. And I think the Fed can still look to these measures like longer-term common inflation expectations to have some confidence that they can stay on hold and be patient while the labor market plays some catch-up. So.
Keith Lerner, your reaction, please. Keith.
Yeah, I think this is likely showing we're at peak growth as far as inflation, but inflation is likely to stay somewhat high. Don't forget, Jonathan, the numbers are still 5% year over year, but if we have above trend growth into next year, these inflation numbers will likely stay somewhat high, but they are going to moderate. And I also agree that taper likely starts in November or December. But it's also important to realize, even if we taper, the Fed's still going to be adding probably about $300 billion of liquidity until the taper's done.
Peter Cecchini, you, sir, your reaction.
Yeah, I don't think this changes much of anything. I mean, the headline, it's a headline win for the transitory camp. But as you know, Jonathan, I sort of object to the phrase transitory. Inflation is almost always transitory. It either ends because the central bank decides it's going to end by raising rates, or it kills itself. And by that, I mean, it kills off the demand piece that caused inflation. And other parts of the inflationary story have not changed at all. Supply chains remain disrupted. We're looking at aluminum at $3,000 a metric ton. And even lumber, which is the poster child for the transitory, in quotes, argument, is still almost 40% above where it was on average in 2019. So I don't think this print changes much at all.
This equity market likes what it sees in the early part of this morning, though. Equity futures up 1/3 of 1%. The Russell of small caps advancing 1/2 of 1%. The Nasdaq 100 futures up 50, advancing there 0.33%. At the market desk on Bloomberg, economic editor Michael McKee, digging through the numbers. Mike, do you think the chairman will like what he sees this morning?
He'll definitely like what he sees this morning, but Peter Cecchini makes a good point. Why did the numbers roll over? That's going to be the key to what the Fed decides going forward. You look at all of the numbers, they come in lower than the economists had forecast and lower than the prior month, especially looking at the core rate. That was a big surprise, just up 1/10 on the month. That had been driving expectations of the Fed maybe having to move a little bit earlier. The transitory numbers that everybody's been following for quite some time are the ones that really fell off here. And you can see in the chart how airfares and used car prices, lodging away from home, they all dropped significantly. Is that because demand fell off? Now, there's a question about new cars. They can't get chips, so they can't make more cars, but sales have dropped a lot. So it looks like even if there is a shortage of cars, the manufacturers can't raise prices. Used cars, we mentioned, down 1.5%. Airfares down 9.1%. Gasoline, though, up 2.8%. That was one of the bigger increases, and we'll have to keep an eye on that because obviously prices are going up. Now, it's not in the core, but people keep an eye on it. And shelter costs didn't really do anything. 0.3%, that's what we've been seeing over the past couple of months, even though home prices are way up. The one question people had is, are labor costs going to make it into the CPI? And it doesn't look like they did. You can see the blue line in particular. That's restaurants. Restaurants up 0.4%, which is a reasonably healthy gain. But compared to the last 4 months, it is a drop-off. So it looks like at this point, either people aren't going out And so they can't raise prices, or they're not having to raise prices to cover margins. And the answer to that question is going to be key to the Fed.
Mike, let's build on this a little bit more. This was from Jens Nordvig in the last couple of moments. He joined us a little bit early this morning on TV and radio. The broadening is really quite a bit more important than what we see in used car prices month to month. Is that what you're getting at as well?
Yes, I mean, we are seeing prices rise a little bit more broadly, but not by a lot, not enough to worry the Fed, and they were offset by these declines this time. So we have to see where we go from here, but the Fed is, you could say at this point, probably on track to continue with the idea of a November announcement and a December start to tapering.
Mike, thank you. Elise, you touched on it briefly. Let's build on it a little bit more. September 22nd, a Fed meeting. What are you looking for from that meeting now?
Sure. We're definitely going to have a close eye on any guidance around tapering. That said, I think it's going to be really hard for the market to be surprised by something that they can see coming from a mile away. Otherwise, we'll be closely monitoring what any forward guidance is in terms of rate hike expectations. For now, we don't think that those are going to come any sooner than 2023. But again, you know, this inflation and, of course, the labor market parts of the equation are going to play a big role in that.
Keith Lerner, same question to you, Keith.
Yeah, I think we'll be looking for confirmation of what we've been hearing and seeing from different Fed governors and presidents, that the taper is going to move forward. They set up the market. There's no reason at this point not to move forward. So we think we will see that transition as a whole. And also just bringing this back to the equity market, if you remember in 2014, we tapered that entire year and markets were up about 10%. So I think this is something the market can certainly digest.
Peter, I'd love your view on this and not on the Fed. That's the conversation we nearly always have in this market. We take the inflation point, the data point, whatever it is, payrolls, then we push it through this debate about what the Fed will or will not do. You think the biggest variable right here is the fiscal decision that still hasn't been made. Walk me through that thinking, Pete.
Yeah, Jonathan, I do. There are two things typically, and inflationary bouts like we're experiencing now are very unusual in history. And post World War I, post World War II, the 1970s, there were two commonalities. The first was large deficit spending, which often lead to a private credit boom, and supply chain constraints of some sort or other. And we've had approximately $6 trillion in stimulus thus far. Most of that, Jonathan, has made its way through the economy. We can see that in the drawdown on the Treasury General account. We can see that in the depletion of excess household savings. So there are lots of things that point to the fact that fiscal stimulus has made its way through. And without the additional 3.5 trillion coming through, which it may not, in fact, giving the resistance amongst even some Democrats. That inflationary impulse due to the fiscal policy driver may actually start to fade. And that fall in inflation wouldn't necessarily be a good thing, because it would mean that the demand impulse is falling and that the corporate credit impulse and the private credit impulse is fading. And that would be a bad thing overall, I think, for the real economy as well as for risk assets.
You mentioned the supply constraints. Let's talk about that a little bit more, Pete. Demand so far, so good. I know you're pushing back against that a little bit, but let's say demand at Nike. This was from BTIG in the past 24 hours. They actually downgraded Nike, not because they think anything's happening with demand. It's all about supply. They point to this severe supply chain disruption emanating from the COVID-driven factory shutdowns in Vietnam that have worsened since the company last reported. I want Kaylee Lyons to build on this. It's an important story. Hey, Kaylee.
Hey, John. Well, Nike's not the only one that could face issues because of factory shutdowns in Vietnam specifically. Of course, Vietnam is responsible for about 19% of apparel exports to the United States, second only to China, which, as we know, is facing factory shutdowns of its own. And even outside of apparel, Big Lots has had factories in Vietnam shut too. Tractor Supply has pointed to manufacturing there as one of the kinks in its supply chain. And really, the list of companies facing these supply chain challenges is getting longer and longer. 3M joined it yesterday, the maker of adhesives for auto manufacturing, doubling its estimated drop in car output to 6%, as Toyota this week cut its expected production for the year by 300,000 units. That auto pain also being felt by paint makers like PPG and Sherwin-Williams, all ripple effects of the chip shortage. And on the subject of that chip shortage, those lead times are getting longer and longer. This is a chart from Susquehanna, which shows that the time between ordering a chip and actually actually receiving it has now surpassed 20 weeks. 5 months, John, that is a record. And again, the spread of the virus in Southeast Asia specifically, where a lot of chip manufacturing happens, is a big problem there.
Kelly, thank you. Need to keep an eye on this. Demand, really good. What happens with supply? We can do this with Nike, you could do it with Apple, you could do it more broadly with the labor market as well. Mohammed Al-Aaron out in the FT in the print edition this morning, this was the quote: "The dominant structural theme post the financial crisis, that of deficient aggregate demand, has given way to frustrating supply rigidities. They're not going away anytime soon." Keith, that story doesn't change with this inflation print. To be optimistic about this market, particularly certain parts of this market, you need a degree of optimism about supply constraints easing as well. Do you have that, Keith?
Well, I think we do. I mean, it's going to take time, Jonathan. And one thing that I think is really important from more of an economic standpoint, so we're seeing some of a slowdown because of these supply constraints today, but inventories are so depleted, and we're going to have to build that up. So maybe it's a little bit flatter, but I think that also suggests that economic growth into next year could be somewhat stronger as we rebuild these inventories, and that should help sales, and sales will drive earnings. You know, I look around a lot of other firms today, they're getting more negative. You know, you look, if you're concerned about inflation, equities are still one of the better hedges against that inflation. And I think what this also means is you want some things that can do better as far as sectors if we have a little bit more of stickier inflation because of these supply issues.
Keith, are you pushing that upside potential for GDP, though, out to next year? Is that something you're pushing out into 22?
I think some of this is certainly deferred into next year in the fourth quarter. I think we've already seen the slowdown this quarter, and you can look at, you know, in the equity markets, you've seen a lot of the cyclical areas already underperform the last several months in anticipation of this. As we move into next year, as those inventories are rebuilt, we think economic growth next year could still stay around 4%, which is almost double the pre-pandemic trend.
Elise, allow me to dress this up in simple terms. What I keep hearing is growth delayed, not derailed. Recovery delayed, not derailed. Are you on the same side of that?
We very much are, yes. You know, this thesis that the consumer still has a lot of pent-up spending potential is one of the key things driving our earnings upside outlook and also our GDP forecast. You know, I would love to take a moment to revisit this question of higher input costs, because to the extent that higher input costs do end up stoking some kind of equity market sell-off, we would be better buyers of equities in that event, given that optimistic outlook about consumer demand. I mean, corporations are certainly starting to flag this as a risk, but profit margins are at a 10-year high. And that's because revenues are surging along with those input costs, and so is productivity. So instead of just thinking about the supply chain issues or input costs in a silo, we prefer to look at measures that kind of give us a sense of the whole picture, like unit labor costs, for example, if we were to talk about, you know, the wage inputs to profitability. But, you know, the efficiency and the increases to output are more than offsetting those rising prices. And so that leaves us confident in this call that equity markets can continue to climb higher from here.
It's a really good point, Elise. Stick with us and we'll keep working on it. Elise Ossenbar alongside Keith Lerner and Peter Cicchini. Let's get you some movers. Equity futures up 1/3 of the market desk. Here's Abby.
Yeah, John, we do have equity futures higher in this pre-market session. And a piece of it is that relatively tame CPI print seeming to lift lots of different sectors. Now, yields themselves are basically flat to up slightly, but that's enough to take the banks higher for a second day. Not huge gains, but you can see JP Morgan, Bank of America, and Wells Fargo all up about 0.4%, despite the CPI growing the least in 7 months. Goldman Sachs also up about the same amount. In addition, they have named Dennis Coleman as the CFO as of January 1st to replace Stephen Scher. Coleman is currently the head of global financing. Now, in terms of the influence of yields up just slightly on tech, well, we see a lift. Tech does not care that valuation could come into question because, let's face it, 5.3% on a year-over-year basis is still super high, the highest in about 3 decades. But tech investors, they're looking past at Apple, Microsoft, Amazon, Alphabet, all up about 0.4%, $6 trillion worth of market cap there, or even more, John, lifting the futures this morning.
Abby, thank you. Thank you very much. Much more from Abigail through the hour. Coming up, lawmakers returning to Washington, D.C., facing a number of budget battles and headwinds to President Biden's economic agenda. That conversation is coming up next. 16 minutes away from the opening bell in New York City. Futures with a little bit of a lift, up 14. We advance 1/3%. This is Bloomberg.
So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Eager to jam through yet another massive multi-trillion-dollar reckless taxing and spending spree, an effort to move our country to the left, literally forever, all accompanied by a suite of literally staggering tax hikes that would kill jobs, hurt families, and crush our competitiveness with the Chinese. It's the last thing American families can afford. And Republicans are going to fight these terrible, painful policies tooth and nail.
That's the view from Republicans. The president facing more dissent over a $3.5 trillion spending plan as pushback from within his own party threatens to derail the agenda. Democrats starting to distance themselves from the bill's lofty price tag. Senator Dick Durbin saying the following: $3.5 trillion is the right starting point for negotiation. It's not necessarily the end point. It really is going to take some personal negotiation, person to person, to see what's acceptable. Joining us from D.C., a welcome back to our Washington correspondent, Bloomberg's Anne-Marie Hordern. Anne-Marie, welcome back. Let's start there. What's it going to take?
Good morning, John. Well, as he says, it's going to take a lot of negotiations. Already we're seeing the negotiations and debate about what the House Ways and Means Committee have put out in terms of this taxation plan. And there'll be debate today and tomorrow before it goes into the budget. But then, of course, the Senate Finance Committee could start marking it up. And there's one thing that is clear from this proposal is that a lot of these tax proposals come well under what the Biden administration was actually hoping for. So potentially we could see markups that come a little bit more ambitious from the Senate, or with the White House putting a little bit more pressure on them. So you have capital gains increases, you have increases on corporations, but mostly this is about income, not exactly about assets, which we spoke about earlier today. And this is where there's going to be a lot of the debate is going to lie, because a lot of people want to protect some of those things. You could see them now. You see the top corporate tax rate, that gets a bit of an increase. Maybe a nod to Senator Joe Manchin, who said he doesn't want anything above 25%, not as ambitious as Biden's. And then total capital gains rate, John, to 25%. The Biden administration was trying to equalize the taxation of investment and income, wanted just shy of 40%. You could see a little bit of this is watered down.
Anne-Marie, thank you. Down in D.C., we won't talk about a certain congresswoman's dress in
I thought we were.
New York. We're going to skip that, Anne-Marie. What's the point? Let's not do it anymore. Everybody's doing that. Anne-Marie Hordern, our Washington correspondent down in D.C. Thank you. Back with us, Peter Cicchini, Elise Ossenberg, Keith Lerner. Peter, I want to go straight to you, sir, on fiscal. Pete, let's talk about it. You touched on it a little bit. What are your base case expectations now for what comes out of Washington?
Well, let me preface that answer by saying one of the key points is that the $6 billion in stimulus, I think, is vastly underappreciated by most when it comes to where corporate revenues are and where margins are. And peak margins that are sort of inorganically produced in a situation like this, if history is any guide, are almost certain not to remain at those levels. Where the package stands, it's really kind of hard to say. But the fact of the matter is, it will almost certainly be less than 3.5 trillion. And no matter what form it takes, it will be dispersed over a much longer period of time.
Yep.
Whereas $6 trillion in stimulus we got the first time was vis-a-vis direct posits and other consumer-specific methods that provided a massive boost to consumer spending, confidence, and sentiment. And the form of this next package is just not going to be that way. And I think so it's going to be far less efficacious, and the direct tax consequences for paying will also have obviously longer-term deleterious effects for the economy and for households.
We had a great conversation on this program with Laurie Calvasina and Matt Miskin on whether we have priced this increase in the corporate tax rate we haven't seen yet to, let's say, 26.5%, which is the latest proposal. Elise, do you think we have? How would you characterize that debate right now from where you sit?
Sure. So our outlook actually does pencil in a corporate tax increase, albeit 1 to 25% and not 1 to 26.5%. But we're at $224 for 2022 S&P 500 earnings per share, even given that 25% corporate tax rate assumption. To the event that we do end up seeing a corporate tax rate that's at 26.5%, that only shaves off around 50 basis points of our expected earnings growth. And so I don't think it's necessarily earth-shattering for markets. We're still very confident in the upside potential from here. But of course, to Peter's point, I think this is going to be, a situation that plays out in the coming weeks. And there's a lot of negotiations to be had that could end up meaning that the final package looks much different than what's being discussed today.
The final word, Keith, would you agree?
Well, I do think part of this is priced in, but I will tell you, Jonathan, we've done a lot of work on taxes in the markets, and we can't find a consistent historical relationship. 2013, we raised taxes, and the market went up over 20%. 2018, we cut taxes, and the market went down 5%. And that's because other factors matter. I think it's more important the trajectory of the economy and what happens with COVID relative to this spending package.
Yeah, we can talk about that next, about whether you want to be in the cyclicals going into the new year. JP Morgan out with a really interesting note. We'll get to the work of Marko Kolanovic and the team in just a moment. No doubt Elise can build on that. Elise Alsenbar alongside Peter Cicchini and Keith Lerner. Coming up next, the morning calls, and later, the value versus growth debate heating up once more. That conversation still ahead. With equity futures going into the opening bell, 7 minutes away, up 15, let's call it 16 points. We advance a third of 1% off the back of a little downside surprise on headline CPI. From New York, this is Bloomberg.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
5 minutes away from the opening bell this Tuesday morning. Good morning. Off the back of a downside surprise on headline inflation on core as well. A lift in this equity market, up 1/3% on the S&P. A lift in the Russell of small caps, up 0.5%. And in the Nasdaq too, we advanced there 58, up 0.4%. That's the price action in the equity market. Let's get you some movers this morning and some morning calls. Morgan Stanley raising its Microsoft price target to 331. The analyst seeing a number of catalysts, including a potential dividend boost. That stock, 299.59, up by 0.9%. Your second call from Jefferies, raising its price target on Live Nation to 103. The analyst highlighting the company's leadership position across ticketing and live events. That stock is up by 0.6%. And finally, Evercore ISI raising its Amazon price target of 4,700. The analyst touting the company's long-term growth outlook after dramatically expanding its delivery stations. That stock is up by 0.6%. There are your calls. Up next, Big Tech rebounding after 4 days of losses. This as strategists continue taking their positions on the reopening trade. We'll frame that debate in just a moment. Your cash open is next from New York. This is Bloomberg.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It is the smallest inflation print of the last 7 months. You push it through this market, what do you get? A downside surprise translates into a lift in this equity market, up 15 on the S&P, positive 1/3%. Similar story on the Russell, up 1/3 on the Nasdaq, up 0.4%. That's the opening bow. Switch up the board and get to the bond market. Your 10-year Treasury yield off the back of this. The belief that this just takes a little bit of pressure off the Fed. At next week's meeting on September 22nd, yields come in on a 10-year now by 2 basis points to 130.39. In the FX market, some dollar weakness, euro strength, euro dollar 118.39. We are positive there, 0.2%, and crude doing nicely through the morning, 71 handle. Jeff Curry at Goldman sounding really bullish on crude recently, up 0.9% there. That's your cross-asset price action this Tuesday morning at the early part of the session at the market desk with your movers. Here's Abby.
Well, John, we are certainly getting a lift for stocks after that disappointing CPI number, that tame print that came out, helping out most sectors at this point. Now, the obvious starting point, banks. The interesting thing is, with yields coming in pretty solidly at this point, that 10-year yield down 2 basis points, as you just mentioned, the yield curve in 2. We see banks, they're not reacting to the downside too much. Now we're seeing a little bit of a flip right here on the open, but not so long ago, we actually had gains. Again, not big moves. In addition, Goldman Sachs, we still see flipping here on the open. Goldman Sachs has named a new CFO, Dennis Coleman. He starts as of January 1st. He replaces Stephen Scher. Coleman is currently the head of their global financing group. Now let's take a look at the energy space, another area of the reflationary trade. Big gains here. This, of course, as Hurricane Nicholas has made landfall in Texas, lashing the coast, causing traders to bid up oil and energy overall. Just 2 weeks after Ida, overall, again, John, as you know, in fact, right now, all 11 S&P 500 sectors higher, a Goldilocks moment, or also perhaps in this case known as reflationary as opposed to inflationary.
All in the green, Abby, just 90 seconds in. Financials basically unchanged. Same with consumer staples, but to Abby's point, nothing in negative territory right now in terms of the industry basis on my screen. Information technology top of the pile up 0.6%. All securities, the S&P 500 advancing a third. This big debate on where you want to take risk in this equity market right now continues. This was JP Morgan's Marko Kolanovic. He weighed in. As Delta subsides and inflation persists due to supply restrictions from reopening and accommodative monetary policy, we expect the reflation and reopening trade to resume its outperformance. The message is strong from JP Morgan. Here's Katie Lyons with more.
Well, John, he may be expecting the underperformance to stop, but obviously it's been underperformance for a while now. Investors leaving some of those cyclical names and rotating back into growth. We see that evident in the ratio between the NASDAQ 100 and the Dow Jones Industrial Average. Ari Wald over at Oppenheimer pointing out this chart. The ratio between those two benchmarks closed last week at its highest level since March of 2000, more than 2 decades, John. And you can thank the difference in tech exposure within those individual benchmarks for that. The NASDAQ 100, of course, heavily weighted toward technology, a near 50% weighting, and another 20% toward communication services, which houses heavyweights like Facebook and Alphabet. The Dow, significantly less tech exposure, weighted more heavily toward the likes of the financials. And it is those economically sensitive stocks that have lagged tech over the last few months. Financials not quite as hard as the likes of energy. The energy index down about 10% in the last 3 months. Materials and industrials in negative territory over that time as well. And the airlines getting absolutely hammered, John. That reopening trade index down about 15% in the last 3 months, down 22% from the peak. But if you believe Marko Kolanovic and the team, maybe that underperformance will end soon.
That peak back in spring as well. Kaylee, it's been a while. Kaylee Lyons, thank you very much. Back with us, Peter Cicchini, Elise Assenbach, Keith Lerner. Elise, I want to come to you. I know that it's a different part of JP Morgan. It's a different part of the bank. You're with the private bank. This is the investment bank. But I think I can ask this question because you're on the same page when it comes to the cyclicals and this belief that perhaps Treasury yields and cyclicals have already bottomed this year and the future looks bright. Can you just build on that a little bit for us?
Certainly. So it goes back to this thesis that underlying demand is going to be really strong, and especially once we get over this Delta variant hump, we do think that this, reopening cyclically oriented trade could really find a second wind. A lot of the opportunities we like in the market, to the point that was just made, are down more than 10%. So there's actually really good value to be found, especially in an environment where broad market valuations are still high relative to their historical average. I will say that we don't necessarily like segments of the market that are super exposed to fossil fuels or airlines, simply because, we think that the pandemic changed some of the, demand dynamics in regards to those two things. But we are really excited about these opportunities that are linked to strong consumer trends, linked to infrastructure spending, and of course linked to this green energy renaissance that we're seeing play out across the globe.
I'll keep doing my best to keep you out of trouble. Just to repeat, Elise, of course, with a private bank, and Marko Kolanovic's call coming out of the investment bank. You can thank me later for that, Elise. Don't worry about it. JP Morgan, cutting tech, raising energy, the message coming from Kolanovic. The message on small caps, Keith, you like them too. Is that part of what Marko Kolanovic and the team are getting at?
Yeah, I think there's been a sea change, Jonathan. When we talked earlier this year in March, everyone was on this cyclical reflation trade. Small caps at that point were outperforming by 19%. Today, they're even with the S&P 500, giving up all those outperformance. So now you've been consolidating. The earnings continue to move higher, and now the relative valuations of small caps are at a 20-year low to large caps. We think into the fourth quarter, there's more upside into the small cap side.
Pete, you've been outright bearish. What's the pushback to what you've just heard?
Yeah, I mean, in fact, coming into the year, was actually cautiously constructive on large cap and tech. But as you know, on this program, I've been a hater of small caps for some time, and that's really mostly based on our view of inflation. Small caps tend to do worse in inflationary environments because, unlike their large cap tech brethren in particular, they simply don't have the pricing power to pass through those higher prices. Moreover, I believe the reopening trade is going to face some headwinds.